Let's start. About 20 days left for your examination, excluding the day on which you will fall sick because of the examination pressure. So, we're going to quickly get started and run you through the entire syllabus of principles and practice of accounting over these 2 days. Let me brief you up for a quick 1 minute as to what and all we'll be doing in this 2 days time. So, we'll be starting with chapter 1. We will not be starting straight away with chapter 3 or 4 because we consider some other chapter to be important. If ICA has included all the 10 chapters in our syllabus, all the 10 are important. I'm also going to show you the chapter wise weightage before we start off our class. And when I say chapter wise weightage, I'm not going to show the BOS knowledge portal's weightage. Because throughout, if you remember, every time if you meet me in class, I tell you not to see that weightage because if you take any question paper and then analyze to that weight, I can prove it to you that that weight is not addressed. And though you know law, you can't sue ICA saying that you're not strict up to the weightage because that weightage is exclusive to paper setter to set. So when I've been telling that all these days, in spite of me telling, the moment we start the chapter, the common question that I got from everyone is, sir, how many marks? So to address that, what I've done is I've compiled the last 9 attempts of CA Foundation ever since May 19, chapter wise, question wise, unit wise, allocated all that 124, 125 marks, including optionals, into the pattern. So though we say that we don't rely upon the weightage, no, we can still rely upon the past examination pattern. So we'll have unit wise, we'll see how many questions has come from this chapter for how many marks. Based on that, we can assess on the topic. We will not be doing it in detail like we do in the regular class, obviously because that was about 200 hours. This is less than 20 hours, 10% of the time. So what we'll be doing? We'll be doing that 80% of the most important part and stressing upon that. But trust me, every single thing that you'll see in the examination hall when you sit at the 2 p.m. or between that 1:45 to 2 p.m., those 15 minutes when you read the question paper, trust me, everything that has happened in these 2 days will be recalled. If like, okay, fine, this we discussed that afternoon at 2 o'clock. This we discussed just before I went to washroom at 3. So whatever. So such kind of memory is what I'll definitely leave you all with. And so conceptual coverage, cover to cover, assured. Second thing is after we finish every chapter, some cases we units. Chapter 6, each unit is like a chapter. So except for chapter 6 and chapter 2 rectification of errors, I constitute to be a separate chapter. For everything, what we would do is once we finish the topic, I have a special gift for you. So we call it TOFA in Hindi, right? So in English, TOFA means true or false answers. So questions you might have seen. So what I've done is I've compiled all the answers with reason. Because you say that true or false is so easy. That's right, true or false. You will get marks. But pretty unfortunate that in the recent ICA student journal, no, evaluators had written their comments as to what is it that they observed from correction of the answer script about your seniors who wrote the exam. So one comment that was written on question number 1 is that majority of the students are able to understand whether it is true or false, but very unfortunate thing is the reasoning what they write is insufficient. And you might say a 2-marker question, I say true, I should get half mark. This is not bargain business. You don't get half mark or 1 mark because you wrote true right. It is on the evaluator's mindset. He is quite happy with your reasoning and the answer. You get all true, or you might not get entirely true. Those 2 marks are paying people who got 98 in second PC accounts knows it. One who got 98 in second PC accounts, you know, no, you lost the 2 marks in question number 1. First question, first 8 to 10 questions, that 2 marks questions. That's where you lost it. That should not happen. So this is a gift from our side to all of you. We call it TOFA. So you will be taking up right here in the class, and that is very comprehensive. In fact, that and this paper analysis is what to major 10. It covers all the past examinations, all RTPs, all MTPs, and few curated questions that I put in. It would be about 40-50 for each chapter. Take up that 40-50 altogether. I tell you like somewhere you'll be taking about 300 to 400 true or false questions compiled altogether. To do all of it, I'll tell you that 12 marks that you see in the examination question paper will be completely from here. Because lot of times when I read the question paper in RTP, MTP, so many questions were repeated. So many questions were repeated. So we'll do all the repeated ones and few curated ones also, so that everything is covered. Theory will be running through very quick, but I'll later share some short notes questions to you all which you can read at it. And then we'll head on to chapter wise chapters which have numbers, starting with rectification of errors, VRS, valuation of inventory, going till debenture suspense based problem in company accounts. So on every topic, I have the suggested answers, not the ICA downloaded one. our version in our working note style. You remember there is slight difference how we do working note and how it's printed in the middle because that is easy to print, easy to write. And our answers, our working notes are little in detail than the usual answers published in the material. So solutions to all the RTPs, MTPs, suggested answers in our working note style is there with me. So I would not be asking you to copy it down, but a topic which we expect to come in the exam, the kind of question that we expect to come in the exam, will be doing that entire answer here. You can just sit back and then see. Let me be your hands. Your brain, my hands. You tell what is to be done, I'll do. You feel like you did it when actually I did the same. Great. And at the end of it, what's in store for you people tomorrow is we will take one of our own Yasha students' last attempts answer script. If few of you in the class, I just showed the overview of it. I didn't show it in detail. I told I'd show it, but I didn't. Got a step back from promise. No, I knew that this day would come. So tomorrow towards the end, we'll see the answer script of that student in detail as to how did he present, where did he lose marks. He got 89 accounts. We're going to see his entire answer script. And we'll also do complete paper discussion. One June 2022 paper, complete end to end. Question number 1A to question number 6D. Complete paper discussion that will about take 35-40 minutes. That will be the last thing that we'll do tomorrow. Get that? So that's how we would be going. And without wasting much time, let's get started. So we have this usual discussion of what is accounts. So we know what is accounts in the sense, go back to the olden times where the early men started making the lines on the wall. Am I right? Starting from that day to the modern day where we have Instagram account, Facebook account, Telegram account, bank account, and I saw a couple of them using Zerodha trading money. How's the market today? Pretty good. Yeah. So we're flooded with accounts. And remember, accounts is an ocean. And if some idiot tells you that he'll finish accounts in 2 days, don't believe him. Yeah, don't believe it. But believe me, okay? Yeah. So accounts is an ocean. We can't finish it in 2 days. But remember that accounts is a count of things. It includes plenty of things. This question won't come in the exam. But this definition based question is so far never been asked as to what is accounts. Accounts is a record, art of recording, classifying, summarizing, analyzing, interpreting, and the financial results thereof. So this definition AICPA ka no need to mug up. So far in the exam, this question has not come. Sir, you made us read this for 20 minutes on first day of our class. You should know that not everything that you're doing is for exam, no. I told you in a reception party, if someone meets you up and asks you what is accounts, you can't tell Adu, you know, there. Yeah. So who's the father of accounts? Luca di Pacioli, and that's it. Let's not talk more about uncle. Then we have Kautilya or Chanakya, who's the guy who gave the first reference to accounts in the book Artha Shastra, what he wrote. Enough said, let's go forward. Yeah, we have other places to spend our time. Here we'll spend a little time because I don't know how many of you know this. So there are 3 approaches to accounts. How many approaches? Very good. Don't say 2, UK, US. We have 3. So really 3? No. Hey. Exam way don't rate 3, okay? Exam way how many approaches do you have? 2, very good. We have our own Bangalore approach to start with, the city where I come from and many of you come from. For the eternal love to the city, we've dedicated another favorite subject that I have, accounts, into this subject. Now come on, if you all make a fist and we punch it hard, not into me, we call it bang. And then if you punch it really hard, your knuckles start hurting, you open your rest of the fingers and we call it what? ALORE, making the complete word Bangalore. A starts for L O R E. Fantastic. If I keep assets and expenses up here and then put it up there, what do you call it? Very good. Assets and expenses. If it is increasing, we call it? Very good. And if the same assets and expenses, if it is decreasing, what do we call it? Very good. So when someone clicks a picture like this, what do you say? Very good. Assets and expense increase, debit. And recently we came across that the net worth of someone is 2 lakh crores. Liability, owner's equity, revenue, go in the. So liability, owner's equity and revenue. If it's increasing, what do we call it? Very good. If it is decreasing, we call it? Okay, quick summary. I'll show some hand signs. I want you to tell what does it mean. Yeah? Assets, liabilities, owner's equity, revenue. Hi. Okay, assets and liabilities increase. Very good. Assets and liabilities decrease. Liabilities, owners' equity, revenue increase. Liabilities, owners' equity, revenue decrease. Fantastic. So what is this? This balance sheet. Oh, sorry, my question was wrong. No, look at what I do. What is it? Very good. So these three fingers goes like this, makes it balance sheet. Very good. Then liability, sorry, revenues and very good. This would be, so complete hand makes it a financial. Very good. So when you get into articleship, if a principal says, what does it mean? Get the financial statements with notes to accounts. Okay, don't forget that. So then under the UK approach, you call the same thing as golden rules. How many golden rules do we have? Very good. How many types of accounts do we have? Types of accounts are 2, but golden rules are 3, because real and nominal accounts together are called as impersonal. What is the rule for real account? Debit what? Credit what? Very good. Nominal account rule. Debit all expenses and losses, credit all. Lastly, what's the rule for personal account? Debit the receiver of benefit, credit the. Yes, and at any point of time, any journal entry, if you still don't understand, you want to apply UK rule, you can still do. So you don't have to be like, no, we're all modern, we need to apply only US rules. No, don't have to. You can still apply it with UK rule at any point of time for any chapter. May it be consignment, may it be goods sent on return or approval, may it be company accounts, or may it be NPO. If you are not able to recall the logic using modern method, please do ask me. I'll tell you in the traditional approach as well. It's very much possible. Types of accounts: 2, personal, impersonal. Personal, how many categories? Very good. And impersonal, how many categories? Okay, impersonal are real and nominal. How about personal? Real personal account, artificial personal account, and representative personal account. You don't have to take note of all of this. I'll share the PDF of this. Don't ask me in the break. I'll share it after tomorrow's class. After. And people, if you ask me today at the end of the class, any funny questions, sir, when will you share the PDF? I'll click it and I'll post it on the story and tag you, saying that this guy asked a funny question. Yeah. So real personal account, artificial personal account, representative personal account. Real personal account. If you cut me, will I bleed? Real personal account. Correct or not? Yashas Academy was making this entire event happen. Can you cut it? No, you can't. Don't even dare to. No. Yashas Academy is an artificial person. Is it? Very good. What is representative personal account? Yeah, outstanding, pre-received, prepaid. Very good. All of that. Real accounts represent assets, nominal accounts represent expenses, and very good. Great. I'll ask you a couple of intense questions. Consignees account in the books of consignor. What is it? Real, nominal, personal? Real personal account. What is it? Very good. Consignees commission account? Nominal, because it is expense. Commission receivable account? Representative personal account. Okay, fine. Bank account? Very good. Don't ever call bank account as real account. Bank is asset. Asset is real. Asset is true. Asset is real, true. Don't mix your UK and US together. Get what I'm saying? So don't mix them up. So call bank account as an artificial personal account. Great going. So then we have our US approach. US approach mein everything is categorized into 5: assets, liabilities, capital, income, and liabilities. Sir, isn't this similar to Bangalore? Yeah. Sir, did you copy? No, inspired. Come on. Assets increase, debit decrease, expense increase, decrease. Very good. Capital, liability, and income increase. Huh? I can actually hear some people saying credit. Take it side. Either say debit or credit. Capital, liability, and income increase, decrease. Fantastic. Don't write in the exam, okay? Credit. Why, sir, I was not clear whether it was debit or credit. Chance nahi lene ka. So we discussed the meaning of an asset previously. What is asset? It's a resource controlled by the entity which will give, which is arising from past event and giving economic benefit. Very good. At any point of time, whenever you have a doubt whether to call it an asset or not, check. There are 2 conditions. So there are 3 conditions. Number 1, you should be controlled. It is totally okay if you don't have ownership, but what should you have? Very good. And it should arise from Past may you've taken it on lease or you have purchased it, and using that you can get future economic benefit. In the future, it should be of some benefit to you. And this definition is not going to stay with you only till mid-December, till the time you write your CA foundation exam and come up. You're gonna use this definition in CA Inter. CA Inter, when accounting standard classes start, every class may 3 to 4 standards are totally dependent on this definition. They will be asking what is asset, what is asset. Then don't look at the sky. Tell that it is a resource. Don't say asset is an item, something, anything. And it is controlled. Is there a necessity that there should be ownership? No, it should be control is sufficient. We're in the modern times. We are not in the times of accounting standards. We're in the Ind AS era. Great. And it should arise from the past event and should give future economic benefit. Great. Then we discuss the word liability. What is it? It's an owing or an obligation because of which you need to pay money. Correct or not? So it's an arising. It's arising from a past activity because of which in the present you need to pay the money. Correct or not? Present obligation arising from in the past you purchase an asset because of which you need to pay money now. So be arising because of a past event and presently you are obligated to pay, and this should result in outflow of resources. Expected to result in outflow of. Don't write the word cash. You need not settle every consideration in cash. You can settle some considerations in non-cash way also. What is the consideration that you paid for this session that you are attending today? No consideration. But no consideration, no contract. What is the consideration? Time. What will I do with your time? The consideration that you guys are giving is doing well in your CA foundation examination. Forgot, Arshita, so bad. So you guys need to do really well in the upcoming examinations. That's the only way you can pay back for all the effort, time, and whatever other resource that's gone into this. Got that? Great. So then we discuss the word owner's equity. Owner's equity will include several things. One, in a simple word, if you to say, it is entire money that needs to be paid back to the owner. It can be the money that he gave, or it can be the money that company has made or organization has made for him. It is the initial capital that the owner has invested, less the money that is already withdrawn, plus the profits that the business has earned for him. You get that? So come on, tell me, what do you mean by owner's equity? What do you mean? What do you mean by owner's equity? Yeah, owner's equity is amount invested plus profit minus amount already withdrawn. That will give you owner's equity. Am I right? No problem. Like question number 3, we also have an option. If that doesn't work, this. Yeah, battery agogide. Come on. Let's go forward. After owner's equity, next one. The ring finger. Revenue. Ring finger stands for, you might sell goods, you might give services. Because of the goods that you sold or the services that you gave, any money that you're supposed to receive is revenue. See this, value of all the goods sold and services rendered by the entity. Lastly, we have expenses. The same definition. One small change and it will be expenses. What is expense? Goods purchased or services taken by the entity. Can you hear me fine? Great. Maybe I am not able to hear me fine. Goods bought or services taken by the, this would be our expense. Got that? So great. Then we have very important part, objectives, functions and limitations. Yeah, very important because everyone spends time on this, but very unfortunate because no question has come asking objectives, functions and limitation so far in the exam. So the objectives, you can always tell systematic record of transaction, evaluating financial performance, position, decision making and rest everything. Functions, again you tell what you can do, measurement, forecast, decision making, comparison, evaluation. And limitations, only qualitative factors are considered. Window dressing is possible. Yeah, very good. What is it? It is biased and price level changes are not considered for. You can chill about this, but you can definitely not chill about this part. What can you do after you qualify as a chartered accountant? Asked in the examination 2 times in the past, almost appeared in 2 to 3 RTPs and more than 2 MTPs. I don't know the number, how many MTPs might has appeared, but mock test paper may also it's come, and it's come twice in the examination. Yeah, 4 marker question. And whenever this question comes up, people end up exhausting their list by writing only the first one. So this is something that you need to pick in this chapter. So what do you do after you qualify as a chartered accountant? ICA has this usual habit of playing with the language. So sometimes no, you know the answer, but you might not write because the same answer might have multiple questions. So one way of asking this question is, what can you do after you qualify as a chartered accountant? Second way of question is, what services can a chartered accountant offer to the society? The third way of asking the same question is, role of an accountant in the society. So there might be 2-3 more ways. You might unlock it in your attempt only. So irrespective of the fact whether the question's language is direct or indirect, discrete or I don't know what is the other one. I don't take BCR. What is the opposite of discrete? You have it, no, something in continuous. I don't know that. And direct speech, indirect, whatever it is. In whichever they ask, what I know is this answer. And I want you all to write this answer. And once it had so happened, this was in a mock test paper that they didn't ask role of a chartered accountant in the society. They asked very clearly what are the services what a chartered accountant can offer in a specific field as a professor, in a profession. So you'll only write that tax consultancy, arbitrary, company incorporation, dissolution, liquidation. You will write only these aspects. If they ask a specific point, what is the role of a chartered accountant in nation building? Or if they ask a specific question, please do only write that specific part. Otherwise, we'll write it in detail. So when it comes to services, what services can a chartered accountant offer? Maintain books or audit books. When you audit books, you can do either internal audit or very good. You can help them in taxation, tax consultancy. Who better than a chartered accountant to help in tax? Am I right? Great. So you can also help them in FPA, financial planning and advisory, new age jobs. About 35-40% of chartered accountants who work in the industrial sector today work in FP&A department as finance controllers, finance managers, assistant finance managers, and several other names. And you can also be doing management accounting and consultancy. Management accounting starts once your normal accounting ends. You do your balance sheet, done. After that, management accounting starts, wherein you analyze ratios. You give data based on which the CFO or CEO, COO or the directors can take decisions. They cannot see the balance sheet and take decisions, no. So it can be part of management accounting because financial accounting is majorly automated nowadays. But still, there is a lot of scope for a chartered accountant as a in the process of setting up of books and maintenance of books. Because when an organization starts, no, what sort of package of accounting to be used, how to implement and how to maintain the entire books, no, be set up by a chartered accountant. Great. So management accounting and consultancy and company related. When the company is born, you need a chartered accountant to name it. And when the company is dead, you need a chartered accountant there to mourn for it. Sir, why can't a company secretary do it? Yeah, but liquidation though you need chartered accountant, no? Correct or not? Sale of assets, who will write journal entry? Payment of liabilities, who will write journal entry? You get that? So I have a detailed chapter about that in entry as well. And lastly, a chartered accountant can provide arbitrary services as well. So these are the services. Now one golden question what I've also got from all of you people is, sir, should I write these side pointers or should I write paragraph also? I like the excitement. The answer is yes, you would have to write a little paragraph. So should I have to mug it up? No, don't waste your time mugging up theory questions. You know, no, if I say management consultancy, will you be able to tell what is management consultancy? When we say books of accounts maintenance, will you be able to write a single line on books of accounts? What is very important is that main heading, just explain the same thing for another line below that. And that would be more than sufficient. Try to read it and understand. Don't try to mug it up. So whenever the question is only on this part, you'd have to just write one line description. And remember, at CA examination level, you don't go by the length of the answer. Don't try to write a very lengthy answer. 4 marks question means 40 lines we should write. 10 lines, 1 mark, 4 marks guarantee. No, it will not work like that. There are a lot of instances where people have written only 3 lines, but is complete 4 marks. But sometimes they give you 4 questions. 4 questions, 1 mark each for 4 marks. Write a short note on 4 points they give: contingent liability, provision, going concern concept, accrual concept. 4 questions are there. 1 mark each for 4 marks. Will you write just 1 line there? No, you can't write provision definition in 1 line. You can't write going concern concept in 1 line. A concern is going. No, you have to write that, no, minimum 2 to 3 lines, whatever we have. So you'd end up writing that. So don't see the marks and then the lines as the ratio. So write what you know. If it is 2 lines for 4 marks, totally okay. If it is 4 lines for 2 marks, it is again okay. Don't try to make it short. You get it? Great. Services of a chartered accountant is over. Then you can work in the industry in several fields like accounting. Everyone, keep reading whenever I give pause because I'll take a small breather and you guys will wake up reading it. Come on, what are the services that a chartered accountant can give to industry? Fantastic. Then in public sector enterprise, it will again look very similar. 1, 2 items are little extra. Auditing and reporting comes extra. Otherwise, the items will look very similar to what you saw in the place of industry. Then we have what can chartered accountant also do? Framing. Yeah, that word is little tricky, but fiscal. What is it? Fiscal policy. When the finance manager of the country comes out with the budget, who do you think churns that numbers the day before? Who else other than a chartered accountant? You can be part of a advisory committee to the finance minister, Nirmala Sitharaman madam, and you can actually help them in making the plan for the budget of the entire country for the next year. That national income, what you read in economics, no? You can be seeing it on the papers before everyone sees it on TV. You will be the one who will put those numbers into the paper, what they get in that red color lifafa, and then open it in the parliament. Now it's no more a briefcase. So you can be part of fiscal policy framing, or you can contribute to the economic growth of the country, and you can help in the nation building. So this is an important one. I'll share the PDF to you later, but chapter 1, unit 1, say what is the key takeaway? What is one question that can always come in the exam? Role of an accountant in the fantastic. So this is what you need to know about the first part. I'll take a quick 10-second time, and meanwhile what I would want you to do is, can you all see the screen? So I want you to scan this code. Can you? Someone's alarm is ringing. Who wakes up at this time? Enappa? 1 second. Can you see it now? Still can't see. Yes? Okay, can you scan the code? This doesn't just include. 1 second. Bharate. So you have it ready. So if you can scan this code, there opens a page, and it has several true or false questions which you guys can start answering. You didn't scan. I have another file to open. Tumma slow idira. Tumma pen slow ah. You can open your camera straight and then scan this. Yes? Not working? Got that? Monitor open. How many of you opened it? Very good. Tough point. Once you open the scanner, it will show a link. We copy the link. I'll open the second presentation. Take time to load. Meanwhile, you can take Q&A. Done. Click a picture and later scan it. How many are there? You saw the number? Did not? How many have you taken? 4, 5, 10? One sec. That's it. Time out. Take it up little later. My presentation is ready. That is for entire first chapter. You just lock your phone like that and keep it inside. I'll give you time little later. I had a little downtime to open the next presentation. So we thought we'll use it wise and I'll let you take 5. So I'll give you another small breather after 10 minutes wherein you can take the rest of the questions. You get it? At the end of it, you can also ask for a copy of that response sheet to your mail ID so that you'll get access to all the true or false questions. And there wouldn't just be true or false answer. After you submit your response sheet, you would get a complete reasoning also, because I told you need to write the reason why it is true or false. But right now you've been asked only to type true or false. But once you answer true or false, you will get the reason what you should be writing in the examination. You get it? Yep. So we are now going to do a topic which can come in the examination for sure shot 4 marks, 8 marks. This is concepts and conventions. Yes, shall we get started? Okay, turn on the lights. Let's start with concepts and conventions. So accounting concepts and conventions is the base on which the entire accounting is relied upon. So this might be part of chapter 1, one of the units, but your entire chapter 2 to 10 is based upon this. No concepts, conventions, no accounts. And the wrong method of reading is reading concepts and conventions after you do chapter 10. It's like ಊಟ ಎಲ್ಲ ಮಾಡಿದ್ಮೇಲೆ ಎಲೆಗೆ ಹಾಕ್ದಂಗೆ. In the South India, we have the tradition of eating food in the leaf, wherein we start with salt on the leaf first. So that salt is put at the first. So reading concepts and conventions at the end is putting salt into the leaf at the end. It's of no use. Great. So there is what is an accounting concept? It's an idea. So it's just a bulb. If we charge it a little, if you put in little power into it, it will glow up. That's what we call as idea. So accounting concept is an idea or a notion. So every idea that you get, can we call it an accounting concept? I also have an idea. You have profit in transit. You have loss in transit, no? Whenever the goods are sent. I have an idea called profit in transit. I want to write a standard on it and make PhD in the same. Is there a possibility of profit in transit? I'll tell you that tomorrow. There is. I'll prove it to you. Technically correct. Keep thinking. I'll tell you tomorrow. But can I call it an accounting concept now? No, not possible. So it should have universal application. Universally, everyone should accept it. Not just me. I am my universe. I'll accept. No. Not possible. Correct or not? Or Kamal Hassan accepted it. Ulaganayagan. Can I call it an accounting concept now? Not necessarily. So it should have an universal application, not just acceptance. And that's when we call it accounting concept. And all of these accounting concepts, no, will be used in preparation of what is this? Financial statements. Very good. How many accounting concepts do we have? A big number, 10. Don't expect questions like that. So 10, 0 Pakdali 1. We'll name them. To start with, we have entity concept, then money measurement. Go on reading. Let's see if you can read fast or I can show fast. And lastly, hey, why is that odd one out? Because it's not part of our present ICA material, but it was however part of the earlier material. And sad part is there were questions on this objective concept also in the exam, and application is also there. And let's now let's go into going concept. Let's start with the 6th one. Come on, let's get started. What exactly do we mean by going concern concept? An organization neither has an intention nor a necessity to close down its operations in the... Okay, the hand sign that we used to remember this is an organization. Hey, first I'll do. First, please. Okay, after me. An organization. Everyone. An organization neither has an intention. People here, don't you have hands? An organization neither has an intention nor a necessity to close down the books of accounts. Sorry, to close down its operations in the near future. 2 marks in the examination. Yeah, they'll ask some question for which your answer will be going concern concept. There can be a true or false question, or there can be a short notes question. So you can also communicate it to your friend very easily. So your friend is sitting here, you are sitting here. Question number 1, answer is going concern. How do you tell? The other person doesn't understand, doesn't know how to read the lips. So what do? And what does your friend say? Going concern. 2 marks. Yeah, yeah. In between, evaluator will be there. He will be like, going concern concept. You read it from Rajavardhan, sir. Why, like, you are also Rajavardhan, sir. Let's get going. So, no going concern, no financial statements. The basis for preparation of financial statements is completely. Previously, there was a topic by name joint venture, part of CA Foundation. May 19 and November 19 exam. This was there. There were three more chapters in your three more chapters. Nahi. One unit and two units and one chapter, which got removed. Number one is joint venture. Second one is royalty accounts, and the third one is accounting ratios. These three units were also part of your CA Foundation syllabus in first two attempts. Their entire joint venture was based on the fact that there is no going concern. Because in that joint venture chapter, we don't prepare financial statements. You might have done it in BCom also, some people. Joint venture, never done. Great. BU syllabus. Did? Royalty was there. Okay, fine. So in case of a joint venture, we don't prepare financial statements. Because it is, hey, you might have read it in Partnership Act. It's a special partnership. Partnership for a specific period, we don't prepare financial statements. Did you understand going concern? Very good. So then after that, we will do periodicity concept. Come on, tell me what is periodicity concept. So we told no, the entire life is very long. We don't wait for the business to get closed. We prepare financial statements for every period. That's what periodicity says. So going concern says that assets need not be sold at the end of the year. Assets can be carried forward from 1 year to closing stock. It's because of going concern concept. Depreciation is because of going concern concept. Entire financial statements what we prepare is because of. Very good. Then we have periodicity concept. Just because we have that the life is for really long, we can't say that we'll not prepare financial statements periodically. We would have to prepare financial statements of an organization at the end of every period. We need to break down the entire life of the business into several small parts called as what? Accounting period. And financial statements are prepared for each of the accounting period. Let's see what does periodicity concept say. I'll say first, entire life of the business is divided into small parts called as accounting period. Books of accounts are opened for each accounting period. I still see people not doing actions. Muscle memory works in the exam. Yeah. Great. In the morning when I was bathing, I didn't know which is the hot water tap, which is the cold water tap. I got confused. Then I started brushing with one hand and from the other hand I opened the tap. I opened the hot water tap correctly. Why? My muscle knows which is the hot water tap, but I might not know consciously when I look at it. You get that? So same thing happens. When you're thinking about something, you might actually recall the answer. When you're riding the bike, how do you apply brake without even thinking? Muscle memory. It works. It's true. Yeah. What does periodicity concept say? Entire life of the business is divided into called as accounting period, and financial statements are prepared for. Very good. This is also called as accounting period concept. They might ask the question with a little different language, but you would have to still write the answer asked in the exam for 2 marks before. Great. So it facilitates uniformity and couple of other things. Then let's go ahead and then discuss. Hey, that going concern concept had come in June 2022 examination. June 2022 examination में 2 marks question was going concern concept. Yeah, if it have written the same 2-3 lines, pakka marks. Then entity concept. What do you mean by entity concept? The business and its owner are not the. Very good. An organization is distinct from its. An organization is distinct from its. Very good. Have a look. Business entity is distinct from its. And remember, this is not the same as our separate legal entity. What we do in company accounts chapter. We discussed this. If you were part of the regular lecture, I had told you, is it the same? I had asked this question and I told I'll answer it when we do chapter 10. Lastly, when we did chapter 10, we did come about separate legal entity concept. No, we discussed that it's not the same. Very good. So the same thing, what is invested in the business is called as capital. And this is asset from the perspective of the proprietor because he has given the money to the business and the business should give it back to him when he closes the business. But it is a liability to the business because the business has to pay this money back to the proprietor when the business gets wound up. So the same capital can be seen from two perspectives. One from the perspective of the business, other from the perspective of the. Very good. So there are two perspectives that you need to keep in. We'll follow the business perspective when we prepare books of accounts, but we need to remember that there's another perspective Possible. Great. Then we'll go on to discuss the topic of money measurement. What do you guys say money measurement concept is? Yeah, transactions. What is this? You give something, you take something. That's a transaction. There are two aspects to a transaction. Correct or not? You take something, you give something. So this is a transaction. What is this? Transactions to be recorded in books of accounts. Transactions to be recorded in books of accounts should be measured in terms of this is done. Correct or not? This is money. If there is no money, no transaction. Can you say some transaction, like some transaction we did barter, can we record in books of accounts? Sir, but what if cash is not affected? Hey, cash is not affected, but it can be measured in terms of cash, no? You get that? Accrual concept. We'll discuss a little later. So, transactions to be recorded in books of accounts. This is not a movie. I'll sing the first line, you sing the second line. No. You repeat what I say, okay? Transactions to be recorded in books of accounts should be measured in terms of money. I can still hear some people when I say should be recorded in terms of, they say money. So I'll say one line, you say one word. So what is it? So transactions to be recorded in books of accounts should be measured in terms of money. Great. Everything is based on this only. Reason why money? Universal application. Everything can be measured in terms of money. Correct or not? Tangible assets, intangible assets, land, plant, machinery, goodwill. Correct or not? Trust, friendship. Sorry, what am I talking? All the things can be measured in terms of. So you can write them in the balance sheet or P&L wherever it belongs to. It's a standard medium of exchange. Great. Fine. So after this, we'll discuss our accrual concept. What does accrual concept say? Hey, this again is asked several times. Accrual concept and then cash concept differentiation. And sometimes they don't use this word accrual concept. They call it mercantile concept. What do they call it? So even if they use the word mercantile, it means that accrual only. So mercantile means business. Previously, your law paper is paper 2. It was called as mercantile law when I wrote my exam. Because it means business laws. Laws applicable for business. Indian Contract Act, Partnership Act, Negotiable Instrument Act, Sale of Goods Act. Whom is it applicable to? Business only, no? So mercantile means business. So before even reading the entire concept of accrual, can you tell me whom is this accrual concept applicable to? Business. So who can not follow accrual concept? Professions or people who don't do business. Not for profit organizations or non-trading concerns need not follow accrual concept. I'm telling need not. I'm telling they should not. Need not. They can, but they need not. Very good. So what does accrual concept say? It says that record transactions. What is it? Record transactions. As and when it, and not merely when it is affected in. Okay, once again. Okay, repeat. Yeah. Record transactions. As and when it happens. And not necessarily when it is affected in. Very good. Nice. Come on, have a look. Record transactions as and when it is happening and not merely when it is transacted in. Very good. There are two bases of accounting or two methods of accounting. One is cash, other one is accrual. Cash is usually followed only by professionals. Sir, can a business follow cash system? If they follow, they will come as a question in your incomplete records chapter in CA intermediate. Why? When we do their books of accounts and then close it, we can't do it in cash system. You would have to convert it into mercantile system. Got that? Great. But an NPO or a profession has an option to prepare accounts in cash system or accrual. Usually it's left to them. Great. So followed by business entities and followed by in can. See the word can there. It's in red color also. Colorblind people, observe. Red color can be followed by NPOs and. Very good. By this, are we done with accrual concept? I'll also tell at the end which 2-3 concepts we have to read in detail or like read it so clearly that because the possibility in the exam is little high. I'll tell it after I finish all 10. No, ask sir, when will you tell? Ask. No, my patience is good. I know people test it. Ask now. After I finish all the 10. Let's discuss the next one now. Matching concept. What's the next one? Matching concept is the basis for your topic of depreciation. No matching concept? No matching concept? No? So I told this example, if you guys can recall, whoever has attended classes before. So any sale cannot be totally called as income. Purchase cannot be called as loss. Because we need to match expenses with incomes to arrive at profit. There is a slight difference between income and profit. Income can become profit. Income can reduce profit. Sorry, reduce loss. But income need not be profit. You get that? Net of incomes and expenses is profits or losses. So we need to match current year expenses, current year income to arrive at current year profit or current year. Imagine a P&L account here. This is the debit side. This is the credit side. So on the debit side, you'll write all expenses. On the credit side, you'll write all incomes. So we need to match all the expenses with incomes. If income is more, expense is less, you'll write profit on the debit side. If expenses is more, income is less, you write loss on the debit side. So we need to match current year expenses with current year income to arrive at current year profit or. Will you repeat it? Yes, come on. One last time. We need to match. Calm down, calm down. Rajavardhan, don't become angry. Don't become angry. Yeah, you are not going to say what I don't say. You are going to repeat. We are going to. Okay, we need to match current year expenses. Everyone, use your right hand. We need to match. Okay, your left hand. Left hand. We need to match current year expenses with current year income to arrive at current year profit or current year loss. See, you buy an asset. You buy an asset. When you buy an asset, you will write it in the balance sheet. But using that asset, you generate revenue that you write in P&L account credit side. If you don't write expense, that entire revenue will become profit, which is incorrect. Against that asset, there is substantial decrease in the value. We write depreciation, writing off a part of that asset to P&L account debit side. That, my friends, is matching concept. We need to match current year expense with current year income to arrive at profit or. Very good. Have a look. It is based on two concepts. One, current year, so periodicity. Second one, no suspense, accrual. Yeah, expense and income are written even not when it is affected in cash. You write it when it is accrued. You buy an asset worth 10 lakh rupees. You don't write it in P&L account in that year. You write in balance sheet. You're using it over 10 years. You write every year 1 lakh because the benefit is accrued in that period, though you didn't pay cash in that period. Got that? Yes. Great. Then we have after, okay, here periodicity, I wrote that and then I would write it in the accrual concept also. Let's go to cost concept, also called as historical cost concept. What is it also called as? Under cost concept, it says that we need to record the assets at their historical cost. The price that we pay when we bought that asset. You bought a land for 1 lakh, today's value is 1 crore. You will still record it in the balance sheet at 1 lakh. Why can't I record it at 1 crore? If you go to record it at 1 crore, you paid 1 lakh for it, but you're valuing it at 1 crore. 99 lakh rupees profit has to be recorded, which is not realized. Please come, find a chair and then sit. There's a lot of place here and there. Everyone, don't look at them. Look at the screen. Yeah, so 99 lakhs of profit should be recorded. When you record profit of 99 lakhs, that is unrealized gain against conservatism. Against? So you should not record that unrealized gain of 99 lakhs. You should record the asset at 1 lakh only. That is historical cost concept. There is an exception to this. What is it? Realization concept. What is it? Whenever going concern is not there, then you are not going to continue the business for long. No, you are going to wind up very soon. Then you won't follow historical concept any longer. You will start following realization concept. So come on, fadafat. See here. Going concern is there. Then what do we do? Cost concept. When there is no, 1 second here. Going concern is there. What do we follow? Historical cost concept. When there is no going concern, realization concept. Do you guys get this? Very good. What does realization concept say? It says that we need to record the asset at that land what you bought for 1 lakh rupees. Today's market value 1 crore. Under realizable value concept, I'll record it at what value? Under historical cost concept, I'll record it at. Do you get the difference? The only difference is conservatism. Sir, why are we recording the profit before realizing? Hey, you will realize that profit now. You're selling off all the assets. Why? No going concern. Angdi muchkondo. You're closing down the business and then going. So you need to record the assets in P&L only because no more balance sheet. What is there in balance sheet? Nothing. Angdi is only empty. What will be there in balance sheet? Do you get it? Yes or no? Very good. So initially we started with realization concept as a concept against cost concept, which will be followed only in the times where going concern is not there. But in the modern times, no, we record realization, we follow realization concept at every stage, because we're in this time of valuation where every business is valued not based on the revenue. Business is valued based on the valuation, metrics that they get, profits that they learn, user base that they have, a lot of other factors. You might be seeing no Shark Tank and all. Yes, not away. Very good, very good. You're focusing on exam. I'm pretty happy. So realization concept is followed nowadays because under the accounting standards also you are allowed to revalue your assets. You are allowed to revalue your PPU lets you revalue the assets. So realization concept need not be just followed when there is no going concern. You can follow it even when there is going concern because accounting standards are amended. Previously we had AS10 fixed assets. Now we have AS10 PPE. ಅದೇ ಹಾಕೊಳ್ತೀವಲ್ಲ ಕಿಟ್ ಅದೆಲ್ಲ ಪ್ರಾಪರ್ಟಿ ಪ್ಲಾಂಟ್ ಅಂಡ್ aware now. That is nothing but Ind AS 16 actually. Same thing what's there in Ind AS is there in your accounting standards also. So when there is no going concern, realizable concept. When there is going concern, historical cost concept. Got it? So by this we finish our realization concept also. Okay. We went back in the presentation. Sir, induku hogotri. Matte induku hogotna? Wait. Idu sariyagide iga. Now we'll do the last one. No, last but actually last one, but last not last but one. Don't know KGF 3 barutto illo. Bandila andre ide last. Bandre this is just sequel. So what is the next one? Dual aspect concept. Every transaction will have two aspects. Every transaction will have, what do we call them? Debit aspect, credit aspect. Get that? So this is the basis for our accounting equation also. So every transaction will have how many aspects? We need to recognize, measure and record. Okay, every transaction will have, we need to recognize, measure and record. Fantastic. So there's one more called revenue recognition, which is not there in your present material. It was there in CPT scheme, but still questions can come. So I put that. Now let's go to dual aspect. Yeah. What is it? Debit and credit, two sets of a transaction. Every transaction will have, we need to then record both the aspects. Fantastic. Our entire accounting equation is based on this. Can you tell me what are the things in an accounting equation? Three items. Assets is equal to liabilities plus, what is this? Assets is equal to liabilities plus capital. Assets is equal to liabilities plus assets, no, liabilities, capital. Assets is equal to liabilities plus capital. L for liabilities, C for capital. Oh. Get that? So this can be written in the form of couple of other things like increase in an asset will lead to decrease in another asset or increase in liability. Increase in a liability will lead to decrease in another liability or increase in asset. You can write 2-3 more versions of the same, which we usually discuss in a regular class, but I can't stress on that here. I'll give you 10-second time so that you can read through it. Read through the same. I'll take a sip of water and then we'll go to next aspect. You guys did read through? Great. You can also discuss examples on the same, but I hope you wouldn't need at this stage. Last one is objective evidence. We can't write book entries. Just feeling little bored today, not having a great day. Come on, let's make some profit. Let's make some fake sale entries. No, you can't do that. You can't do that, but yeah, people do that, but no, we can't do that. Yeah, so what should we be doing? For every transaction that we write, there should be supporting evidence. There should be an evidence proving the objective of the transaction that we recorded. So what do we say? For every transaction, there should be an evidence proving its objective. For every, there should be an evidence. Evidence is supporting document proving its objective. So that evidence can be an invoice, Get that? Can be a receipt, can be a memo, or can be any other document. You get that? See, every transaction is to be supported by an evidence proving it's great. By this, we successfully completed our accounting. Next, let's go ahead and then discuss the next part. So everything is same, accounting same, con is same, only mentions will come in. So we'll discuss accounting conventions. Shall we? We'll get a short breather after we finish accounting conventions for you to take few true or false. So it's a break for me to open the next presentation, not break for your mind. You can just look into your phones and then take the next 10 true or false. Great, let's go. What is an accounting convention? I told you, concept is an idea. You're sitting one morning in the washroom, suddenly one idea comes. Why did it fall down and not splash back? Oh my god, gravity. I told you, see, Isaac Newton didn't find gravity when he sat under an apple tree. What the hell was he doing in the washroom every morning? But if he ends up telling everyone that he was sitting in the washroom in the morning and what to say, things didn't hit back and it went downside, and then he thought of an idea called gravity. Then when Steve Jobs made this company called Apple, the logo of the company was Isaac Newton sitting under an apple tree. Initial logo, before they gave that half-eaten apple, the initial logo was this. They would have to give a different image of Isaac Newton. That would not be possible. So you would not disclose the place where you get the idea. So accounting concept is an idea like that, which is universally accepted. Correct? But convention is not an idea like that. Conventions were not there. Conventions were, you had concepts. Based on concepts, you started doing accounting. In the process and practice of accounting, certain places you felt like, hey, what do I do here? How do I treat it here? There are more than one methods. At that point, no conventions popped up. And these were universally accepted. And generally, people follow it in financial statements preparation. And there is a very good difference between concept and convention. Don't ever confuse concept to a convention. Allah on there. No. Difference. There is difference between concepts and, correct or not? Yeah. Come on. What is accounting convention? It is those things which will emerge out of. Very good. This is derived by usage and. So initially when we start accounting, we don't have accounting conventions. In the process, we'll start applying this. How many conventions do we have? Very good. To start with, conservatism. We use this repetitively. Very, very important point. Conservatism is not prudence. Prudence is very big. Conservatism is one small star in the galaxy of prudence. If prudence is a galaxy, then conservatism is a star in it. And galaxies are made of multiple stars. Okay, fine. So conservatism, what does it say? We need to beta. First list mooks padna. Conservatism. Then consistency. Then lastly, sir, why full disclosure is in blue? I'll give you a clue. Same happened with objective evidence. Not part of your material right now. Yes, great. So what do we mean by conservatism? We need to record for all expected expenses and losses, but not for expected incomes and. Will you repeat it after me? Record, account for all expected expenses and losses, but not for expected incomes and gains. If we expect some income, don't disclose it. Don't record it. If we expect some loss, record it right now. Yeah, got it. See, have a look at conservatism. If there are profits and losses in the future, you need to look at the losses and then record it. Sir, such a pessimistic attitude. We are not here to comment upon the attitude of the business. We are here to record profits. Okay, fine. Write expected profits. Next year, you will make sales. No. On that, you will make profits. No. Oh, I'll give break. I'll give break. Oh my God. Did you aim it at me? Like, shut. Miss you, sir. Yeah. So, conservatism says that we need to record only expected expenses and losses. If you expect some sales in the next year, on which you are expecting some profits, record such profits, pay tax also on the same. Income tax department will be. Can we do that? When you realize the profit, record it. When you don't wait. You also wait, Madi. You get that? So all expected expenses and losses should be recorded, but not expected incomes and. Don't look at me there, sir. Yenni de sir ali. That yen I'll remove. Okay, so this prudence can be a reason for window dressing, but it should not be. Do it prudently and do it with an intention to do faithful representation and neutrality. Don't say, sir, I'm expecting 100 crores loss next year. I'll I'll disclose it now. I'll make provision. Why? You made 120 crores profit this year. If you write 120 crores profit, no, you might have to pay tax on the same. So what do you say? Sure, next year full loss. So I'll make provision now. And then what do you say? Evade tax. So it can be used for window dressing, but you should not be doing it. You should be doing faithful representation. Based on this, you'll be reading SA 540, accounting, estimate, and everything in auditing when you come to CA Inter. That's continuation of this, okay? Remember, but for now, conservatism says that we need to record only for expected income, expenses and losses, not incomes and Then consistency. What is consistency? Yeah, now at 11 o'clock in the morning, all of you are sitting here, should all be there at 4 o'clock, 5 o'clock, 6 o'clock in the evening also. Don't run away. Sit for 2 days, complete days, and I can show some change. You run away in the lunch break, I can't show you any change. Get what I'm trying to tell? Yeah, you need to change seasons only then. So the impact will become little different. You guys, I would have to warm up you people a little and then do little concepts and then we'll do everything. Yeah, trust the process and then sit for 2 days. You get it? Let's see. Kutkoli yenagate. Yeah, maximum you might pass. Ashte, nothing. Correct or not? Yes or no? Yeah. Hey, correct. Haven't you heard that dialogue? Haven't you heard that dialogue? People say, okay. Veelaithe premiddam. Correct. No. Prabhas in Mirchi said, Maha aithe tirigi premistaru. That's it. Max what you can get is marks in return. Come on. Consistency. What does consistency mean? Accounting policies and accounting principles should be consistent from one accounting period to you can't keep changing them. Sir, I'm bored, sir. I don't want same things. Different. That you do with your breakfast. Don't do it with accounting policies and principles. What you follow should be same from 1 year to. There are exceptions. What you'll read in accounting standard 1, but otherwise it should be consistent. Then we went on to discuss. Then we'll go on to discuss the last one. No, last but one, materiality. What is materiality? See, we need to disclose all the facts and figures, but we need to stress more on the material facts and figures. Now we need to discuss the entire syllabus cover to cover, but we need to stress on the important aspects. If I start discussing accounting policy for 30 minutes, see, when you start from your home to reach the destination, there are 2 ways. If I start like that, we need 200 hours to finish syllabus. If you have to do it in 20 hours, what do we do? We keep it crisp. Important topics will hit on. Same thing with materiality. All the aspects which affect the decision making of the user, which affect the. If you disclose this, no, he will take different decision. If you don't disclose this, he will take different decision. Those aspects have to be disclosed on the face of the financial statements. That's what materiality says. What does it say? All the facts and figures which are significant should be disclosed on the face of the financial statements. And we also have some other thing called as full disclosure, which says, you will disclose material things, I agree, but what about immaterial things? Disclose them also. Why? According to you, they might be immaterial, but the perspective can change. You get this? Now I am walking. 2000 rupees falls out of my pocket. What will I do? Who will pick up 2000 rupees? Rich man. I do problem worth 2 lakh, 3 lakh rupees. Accounts every day. So 2000 rupees? No. Actually not, but just imagine. So to me, 2000 rupees might not be material if I'm a very rich man. You get this? To you, 2000 rupees might be material because that's your 1 month pocket money. 1 month? No, sir. 2, 3. Fine, whatever it is. Do you get what I'm trying to tell? You people 10 rupees. 10 rupees. But some beggar on the street said 10 rupees. Oh, 10 rupees. You get what I'm trying to tell? So materiality differs. So don't let materiality deceive you. You need to disclose all the facts and figures. But what you do is, material things you disclose on the face of the financial statements. Immaterial things you will disclose in the attachment, which can still be considered in decision making. So full disclosure needs to be made. By this, we have successfully completed the entire accounting concepts and conventions. We have a little more to discuss. Accounting policies, principles, accounting standards, little provision, contingent liability, and last part. Yeah, I'll open another presentation for that along with capital revenue. Meanwhile, you can all head back to your phones, take up next 10 true or false questions. Yeah, at 1 minute breather. Inaito? Important question. Important concepts. Who asked? Remind me. Who told who? Remind me. Elappa. Ask. Thank you. Thanks for reminding. I had forgotten. So the questions have so far come on money measurement concept, accrual, matching, and going concern. Money measurement, accrual, matching, and going concern. So with regard to these, no, you just read that paragraph that is there in your material once, so that you will be able to write at least 1-2 lines extra over and above this one. You get it? Yup. Money measurement, accrual, matching, and going concern. Okay, na? You want me to show the code, or you guys have the code? QR code is there. Those of you who have not opened. Hey, read before you put true or false, okay? And if there is some question on which we have not done the topic yet, leave that question, go to the next one. Once we finish, you can do the rest. Artists in the class, are you drawing the QR code in your book? No, don't try to do. Haven't found such a person who can draw a QR code in their book yet. Accounting cycle, what's there in the first chapter, we'll not discuss separately because we'll do it little later. We'll do it little later. When we start with next chapter only, we'll do it there. What do you see on the TV? QR code. Chapter 1, don't do it in partnership. A sheet is passed upon. Anyways, would have to sign next to your name, okay? Don't sign next to your friend's name. Anyone here today who had not registered but still here today? Good. Nice. Great. Shall we go ahead with our next discussion? Capital or revenue? Okay, take a couple of more minutes. You'll also feel like a breather. And on this topic of capital revenue, I'll be sharing a separate QR code with you all, which you can take as homework. Plus capital revenue, just need to segregate them as capital revenue or expenditure. Ready? Go to a presentation tab. Give another 5 to 10 minutes. But I'll share you about 4 to 5 forms today, the kind of ones that you're solving now. But you should ensure that you finish this 4 to 5 by end of today. Yeah. Great. Come on, head back everyone. Phones in, phones in. Relax. Let's start with capital or revenue. Shall we? See, any payment or receipt should be categorized into capital or revenue. That's a very important categorization. Because if an item is of capital nature, it should not be written in P&L. It should be written in balance sheet. If it is of revenue in nature, it should go to P&L account. So how to categorize an item as capital or revenue? Now, you buy a building. Is it capital or revenue? Depends. If you are a real estate agent or a developer and buys a building, you buy a building. So you sell buildings. That's your goods. Building to you is inventory. Correct or not? You sell it like peanuts. So the same building will be inventory to the person. However, another person, a professional, a chartered accountant bought a office space. Or an academy, we buy a classroom. So that will be capital expenditure for us. So the same building can be capital to one, but revenue to the other. So we cannot straight away say whether it is capital or revenue looking at the item. You get that? So car, capital or revenue? We can't say. Yeah, car, if it is bought by a trader who trades car trade, or would say cars24.com or car deco, whatever. To them, cars are inventory. However, if I buy a car, yeah, very good. So it depends upon the nature of business. What is the first important factor? Very good. And then, okay, wait. Let's straight away into this. So based on the considerations, usually we run through this quite long, but we need to rush it up here. The first important consideration is nature of business. So if that item is part of your normal operations, it is revenue. If it is not part of your regular operations, it is very good. Then the second point to be considered is purpose. Now Ratan Tata buys a car. It can be used for office commute or it can be used to sell again. If you buy to sell, it is revenue, inventory. If you buy to use for office purpose, yeah. Now Shobha developers also will have an office. Correct or not? So that office, what they have, or monthly constructions or whatever. These construction companies also will have an office. What they'll use for their office. That building is their capital expense. But however, the buildings that they build to sell are revenue. So basically, not just the nature of business, another important consideration is purpose for which that expense is incurred. Then the third point that you need to consider is recurability. If it is a recurring item, it is revenue. If it is a non-recurring item, it is very good. Then we also need to consider materiality. If the amount involved is huge and material, capital. If the amount involved is not material, immaterial, revenue. Now I might buy a pen which I'll use for 4 years. Which I'll use for, but I bought that pen for 100 rupees. Immaterial. Why to write in balance sheet and then charge depreciation? Write it to P&L account. Yeah, that pen, someone threw it. So the pen that you buy, though it can be used for several years, you bought a punching machine, you bought a stapler, stationery, all this can be treated as asset because of the long duration benefit, but because of the immateriality, we'll call them as revenue and then rating in P&L account and will not rate them in balance sheet. You get it? Great. Then the last point that we need to consider is revenue generation capability. To call it a capital item, it should be able to generate revenue. Why? Remember the definition of asset. It's a resource controlled by the entity which has capability to generate revenue. If an item, each amount involved is huge, I incurred a huge advertisement expenditure. Huge advertisement expenditure. You get that? My turnover is 1 crore. I spend 5 crores on advertisement. You get that? Now that advertisement may whoever I have as a ambassador will come in the ad and that ad will come on the TV only for 1 year. Can I write it over 5 years? I should not. I should not. Though amount involved is material. Though amount involved is material. I won't get any benefit out of in the later years. So I should write it completely to current year. So which of these points should be considered? All. Which of these points should be considered? So whenever an item is given to you and you've been asked to categorize it into capital or revenue, you should think all of it. What is the nature of business? What is the purpose for which it is incurred? What is the recurability of this item? What is the materiality question of this? And what is the revenue generation capability of this item? Considering all of this is how we decide whether it is capital or revenue. So this is ICAI's favorite question. Usually 4 marks will come from just this topic, meaning they will give some expenses. You should just write capital revenue, capital revenue, capital revenue. And you don't have to read this from anywhere else. What I'll do is, now I've been sharing QR codes for all the chapters, unit wise. I'll share one separate sheet. This will be homework. This I'll show it at the end of the day. If I don't, ask me. Sir, Remind me at the end of the day. I'll share the QR code for that last capital revenue sheet. It has exhaustive coverage of all the past RTP, MTP, and ICI material, and few of my own made examples also on capital and revenue. If we can do that whole, no, everything is done. If there is a question coming up on capital and revenue in the exam, it will be definitely out of the pool that we have compiled. Not because our pool is less, because we have comprehensively, it's more than 100 capital revenue questions. You cover all of it, pakka it will come from there. And 100, you take how much time? You would take about 3 to 4 seconds to select one as capital and revenue. 1 minute has 60 seconds. So in a minute, can you do 15? So you should be taking about 5-6 minutes to finish entire 100. Get it? So 5 to 6 minutes and 4 marks in your exam is in your pocket. Sometimes what ICA has also done is, they have not asked you to identify it as capital or revenue. They don't say repairs to building, tell capital or revenue. They don't do that. Sometimes what they do is, they'll give you a statement and ask you to write true or false. Meaning, they'll include capital revenue based question in true or false only, which is already included in the sheet that you already opened on your phone and kept your phone on standby. Not that. Great. So this is capital revenue. Then, as I mentioned, why do we segregate them into two categories? Because their accounting treatment is distinct. Where do you rate capital items? Where do you rate revenue items? Fantastic. There are some items which are actually revenue but behave like capital, which are actually revenue but behave like rent for the rent for the place is what? Capital or revenue? Very good. Purchase of the building? Capital. When I purchase the building, I can use it till the, what to say, over a decade or quite longer than that also, depending upon the material used in the construction of the building. However, if I pay rent is for a specific period, no, fortnight, a month, quarter, max an year. What if the landlord comes to me and then requests me to pay the rent for 2 years together? He says, sir, lot of family problems, sir, please, sir, to pay 24 months rent now only. I'll give you 4 months discount also. Pay 20 months discount, pay 20 months rent, use it for 24 months. So I paid 20 months rent and I'm able to use the premises for 24 months. So we call it prepaid rent. What do we call it? Prepaid. Now this prepaid rent is expense, revenue expense or capital expense? Actually revenue. But because you paid for 2 years, it looks like, this is a deferred revenue item. What is this? It is revenue but looks like capital because you paid it for a period longer than an year. So then what do? In the 24 months rent benefit that you're getting, 12 months relate to current year. 12 months you write to P&L account. The next 12 months extent is for next year. You will write it in next year P&L account. Where will you write it? Sir, till there, where do I write? Till there you will write it in balance sheet. I'll repeat, you pay 24 months rent, out of which 12 months relate to current year, you write 12 months rent to current year P&L. The next 12 months rent relates to next year, you will write it in next year P&L account. Till next year you will keep it in balance sheet. Just because you write in balance sheet doesn't mean that it is capital item. It is temporarily capital item or it is revenue item of next year. You get that? Have a look. Read this. What is deferred revenue items? Everyone allowed. 1, 2, 3, start. Pertain to a period. Very good. Got that? Fantastic. Then we'll quickly get into the next topic, that is accounting policy. So policies are simple. These are what to say, principles, conventions, bases that are used in preparation of financial statements. We call it this way. See, assuming that you are here, you can be he or she. So I put both. Previously I used to put only this first image. People are like, sir, you do gender discrimination. You give only guys as example. Okay, take it. Fine. So you are at this point, you need to reach this destination. There are 2 or more than 2 ways in which you can reach. How? You can take a car, you can take a cycle, you can take a flight. So whatever you take to reach is correct to you. Your choice of option. Yeah, that is your policy. What is it? That is your, what is policy? When there is more than one way, all of them being right. Sir, what if the road is left? Right in the sense correct. What do you mean by right? Correct. What we select is our, get that? So when there is more than one way, all of them are correct or right. What we select is our. Similarly, with an organization also, there are instances where they feel more than one way out. They feel like there is more than one way out. Now you need to amortize your goodwill. There is more than one way out. You need to recognize your revenue. There is more than one way out. There is recognition of revenue that you should, I want to say, recording of sales entry. There is more than one way out. You get that? So a lot of things, so there is more than one way. All are correct. They need to pick one. Whatever they pick is their policy. So this is accounting policy. What is it? Accounting policies and principles are, accounting policies are principles and methods of applying those principles in preparation of. There are plenty of examples starting with valuation of inventory. In order to value inventory, we do multiple things, no? FIFO, LIFO, SAM, VAM, adjusted selling price method. Correct, no? Weighted average method, adjusted selling price, quite a lot of methods are there. I was analyzing that exam paper pattern, no? What I observed is, we spend so much time doing FIFO, LIFO, SAM, VAM, no? We do only one problem on adjusted selling price method. Do you know that adjusted selling price method has come twice in the exam? LIFO has come once, FIFO and SAM has never come. You see the amount of time that you spend in class. You spend, if you're spending 1 hour on FIFO, LIFO, SAM, VAM, you spend 5 minutes on adjusted selling price. But adjusted selling price has come more times in the exam than rest of the things. LIFO has come only once. Only once. Till date. 9 attempts. How many attempts? What you will be rating is the 10th attempt of CA Foundation. ICA has this habit of changing syllabus every 5 years. Oh, now all the dots are connecting. Great. So here we have the second example called method of depreciation. This is not an accounting policy. This is not an accounting. It is an accounting. It is an accounting. Very good. So we'll discuss that little later. We have a separate chapter also to discuss the same. So then why did you write there and then scratch it? Because some old materials might still show method of depreciation as accounting policy, and you might think that sir gave only 3 examples. This material is better, it has 4, and you might read that. So in the present time, it is not just important to tell what is right, it's also my responsibility to tell what is not. Okay, method of depreciation is never a policy, it is an estimate. Great. So what are the disadvantages of accounting policies? There are plenty. Number 1, you follow one policy, I will follow one policy, someone else follows some other policy. There is no uniformity, and people follow different policies. They can use it to do window dressing. This policy high profit, this policy less profit. This year you want to show high profit. Why? You are seeking investment from people. Follow the policy which will give higher profit. Next year you got enough investment, now you are not seeking investment, your organization has become profitable, you need to pay tax. What do? Now follow such policy which will give you lesser profits. Why? Evade tax, our national objective. You can't be doing that. So there are a lot of disadvantages. What are they? So comparability is not there. Different people follow different policies. No comparability. There is no standardization. There is no uniformity. There is no reliability. Only one thing is there. Difficulty in selection. Because there are so many options, you don't know which one to pick. Even genuinely you want to pick the right option, you don't know which is the right option, because you're left with so many options to pick from, like an MCQ question. So to counter all of these cons that we have on accounting policies, there comes a savior. Who's it? ICAI, Institute of Chartered Accountants of India. Nice bird, no? Pigeon alva? Eagle. Yeah. So the eagle was put as a logo of our institute because when the institute was formed in 1949, no, the chairperson was called to inaugurate. He told that you people see beyond problems to arrive at solutions. You don't see problem as problem. Similar is the word of eagle. Whenever it starts raining, no, other birds go to nest. Eagle flies above the clouds because rain comes from cloud. No, remember condensation, evaporate. You go above the clouds, no rain. So simple. Eagle flies above the clouds so that there will be no rain. Same is all of us as chartered accountants. We fly beyond the problems to find solutions. Yeah. Come on. So ICAI has issued several guidance notes and accounting standards to overcome all these accounting policies, problems with accounting policies. However, our guidance notes will not read in foundation level. Guidance notes you will read it in CA intermediate only. Now let's start with the topic accounting standards. Shall we? Guidance notes in inter also they give a separate book for guidance notes. So people take that book, keep it like that only. Nobody reads it. But it will be part of your curriculum. You would have to read. Come on. Let's get started with accounting standards. What are accounting standards? Why are you guys smiling? Yeah, accounting standards are written policy documents issued by government, expert accounting body, or covering the aspects of recognition, measurement, presentation. Hey, this is not how we do it. Shall we do it again? How do we basically discuss accounting standards? You start with Singh is King, Akshay Kumar. Then you go down to Shah Rukh Khan, the signature post. Then you will close it up with Disco Diwani at the end. Disco Diwani. Okay, what comes first? Akshay Kumar. Then Shah Rukh Khan. Finally, Disco. You can remember it by any name. Varun Dhawan or Siddharth Malhotra or any okay, whatever name you want to remember it by. So how do we start it? Okay, we start with accounting standards. Everyone, what is it? Are written policy documents issued by government, expert accounting body or other regulatory body covering the aspects of recognition, measurement, presentation. Get that? Come on, one second. Tell me. Okay, what are accounting standards? Accounting standards are written policy documents issued by government, expert accounting body or other regulatory body covering the aspects of presentation. Fantastic. That, my friends, is accounting standards. How many accounting standards are there and issued by ICI so far? The objectives is same thing ulta. Let's run little forward. Yeah. Standard setting process, not important. Sir, class ali idella barsadri. Hey, in the class you should read. Not in revision. So how many accounting standards are there? 32. Big list. You get that? I'd asked you to read 3 standards every day. And I told in the span of 12-13 days you should finish all 32. I hope 32 days is not, I'm going to say 10-20 days is not yet over from the day you started reading 3 standards each day. Very unfortunate. Such short time. Even if you would have read 1 standard for 2 days, you would have finished 64 standards by now, which is not there. Still not done. God bless you people. So how many standards are part of your curriculum at CA foundation level? You will be reading little bit of AS1, little bit of AS2, little bit of AS10 and 26. But in detail about AS1 and 29 that way, we'll quickly understand AS1. What is it that we read in AS1? When you disclose, AS1 doesn't say do this, do that. No, it says do whatever you want. But tell me what you are doing. So there are 3 things to be noted in AS1. First part is fundamental accounting assumption. We spoke about disclosure, that you need to disclose things. You need to disclose everything except 3. Because these 3 things are usually assumed to be followed. You get that? What are they? GCA, going concern, consistency and accrual. Whenever an organization is a going concern, it is following accrual system of accounting or it is having consistent accounting policies and principles, it need not disclose. If your organization is not a going concern, you would have to make disclosure. If your accounting policies are not consistent, you would have to make. If your accounting is not on accrual basis, then you would have to make. However, if you follow these 3, should you make disclosure? Answer is no. Then we discussed consistency ke liye there are exceptions. Consistency means what? Accounting policies, accounting should be consistent from 2. So it should be consistent from one period to another. There are exceptions to the same. What exceptions are there? Changes in accounting policy. 3. Number 1, law changes and then it wants you to change. You can change. Number 2, accounting standard changes and it wants you to change policy. Can you change? Last one is BP, better presentation. So for the purpose of change in law or at the times when AS changes or for the sake of better presentation, you are allowed to change your accounting. Fantastic. Last thing, considerations for selecting accounting policy. 3 points. Prudence, substance over form and materiality. I told you there are plenty of options. All of them are correct. How do you pick which one to follow? Based on prudence, substance over form. Prudence, practicality. You need to think practically in accounts. Conservatism was also part of it. Substance over form means substance over legal form. Whenever it is a question about reality and legality, what wins? Reality will win over legality. Sir, but law, that you tell in law class. In accounts, when we are doing, what do we see? We see reality as more important factor than some items we might not own it. On paper, the ownership is with somebody else, but we still record it as an asset in our balance sheet. Why? We see control over the asset. We don't see ownership. You get that? Now, you have entered into, one sale agreement, but that agreement is not registered. So, because it is not registered, it is just an agreement to sell, not registered document. So, what is it? It is actually not legally viable. You can fight, but it's not legally transfer yet. But TOPA, transfer of property act, it's not a transfer. But accounts mein, we write it as sale. We write the entry. Why? We go by reality. We don't go by legality. You get that? Legal amel note kodana. But for now we'll write the entries based on reality. So that's what substance over form say. What does it say? Accounting reality is greater than mere legality. AS2 will discuss it in chapter 4. 10 will come across it in chapter 5 when we discuss depreciation. We will discuss a little bit of AS26, intangible assets in goodwill. Sorry, goodwill in partnership act, chapter 8. But we need to discuss AS29, provisions here. Shall we? We'll not do it as detailed as we do in the regular class, but let's fatafat discuss what is contingent asset, contingent liability, and how to say provision. Definition is little tricky, but we can break it down. A question has come on what is contingent asset, what is contingent liability, and what is provision. All the three have been questioned, so you can mark this important and you should know these three definitions. These three definitions should be known. Great. Let us start. So what do you mean by contingency? You don't know the outcome. You don't know the result. It is dependent upon several factors. On based upon happening or non-happening of that factor, you will decide whether it is profit or loss, or what to say, whether it is an asset or not. That's what we call as contingency. Contingency is an event dependent upon happening or non-happening of future, uncertain, and lastly, uncontrollable activity. Now, if I raise a bet saying that I'll give you 100 rupees if it rains today, you receiving that 100 is a contingent event. Why? I might give you that 100 or I might not give you that 100. It is dependent on whether it will rain or it will not rain. And rain, I'm talking about it will rain today or not, meaning the time is there till 12. So we are right now around 11. So we have about 12 hours to go till then. So it is future. Am I right? It is future. And am I sure that it will rain? How do I know? And can I control rain? I'll say, come on now, start. Can't really control rain that way. So it is future, uncertain, and uncontrollable. Based on these three factors is dependent an event wherein should I pay money to you or not pay money to you. So that is contingency. See, it's an event. What is the event here? Me paying you money. It is dependent on happening or non-happening. Of what? An activity which is future, uncertain, and fantastic. If this future, uncontrollable, uncertain event results in outflow, I would have to pay you 100, no? So to me it is contingent liability. Why? If it is liability means now only I should pay you 100. Should I pay right now? I will pay if it or if it doesn't rain. That is the kind of bet that we can have. So if contingent event results in outflow, it is contingent liability. If it results in inflow, it is contingent. Do you get this? Okay. Balance sheet may do we write contingent assets liabilities or assets and liabilities? We should write in the balance sheet assets and liabilities. One second. Yeah, we should write in balance sheet. One second. We should write in balance sheet assets and liabilities. We should not be writing contingent assets and liabilities in balance sheet. Contingent liabilities have to be disclosed by way of footnote. Contingent assets will never be disclosed. Contingent assets will never be. Why? Again, conservatism. If you still want to write contingent liabilities in the books of accounts because of prudence or what is a conservatism. Sir, contingent liability means expected loss. I want to provide for the same. Can I create provision? The answer is yes. But to make provision for a contingent liability, it has to fulfill two conditions. What is it? Probable outflow and reliable estimate. Same concept of husband-wife. Get that, no? Okay, let me just reiterate it to you people. Very simple. Husband and wife are like asset and liability. They'll go to balance sheet. Contingent asset, contingent liability is boyfriend and girlfriend. Meaning can become husband, can become wife, but need not or might not. Correct or not? A contingent asset can become asset. Get that? A girlfriend can become wife, dependent on several things. Number one, event. What is it? Wedding. It will happen in the future. Not certain and not in your control. Correct or not? So a contingent asset can become an asset dependent upon happening or non-happening of an event which is future, uncertain, and uncontrollable. Contingent liability can become a liability. You get that? Dependent upon happening or non-happening of future, uncertain, or uncontrollable item. Get that? Uncontrollable event. Get that? No? Correct. Previously, I used to tell liability will become contingent liability, and I used to tell girlfriend example. My wife got offended. Why do you call wife as liability? Why not an asset? Okay, fine, asset. I didn't know that she also watches some of the classes. Now, no taking chances because I get my lunch from there. Otherwise, also, I don't want to die tonight. Fine. So let's go ahead. But you have the tendency of what to say, saying that girlfriend to everyone. But if you say girlfriend as girlfriend, huh? Huh. You thought I had some problem. You tell me. You go, no problem. Okay. Hey, why sir free to use washroom? You get that, no? Free to use, right to washroom. Human rights, it's not there, but it's part of your fundamental rights. You can get up and go to, and when someone is getting up and then going to washroom, don't look at them till the time they go out of the door. You look at the screen meanwhile. Come on, let's get back. So we were discussing about provision. See, you would want to take that girlfriend home and then show her the house around. But if you say girlfriend, then at home, no. But so what do? You tell a lie. Hey, no girlfriend. Friend, just friend. Just friend. So you tell a lie there. You tell a lie, not girlfriend, just friend. Similarly, there is a contingent liability. You want to take it into books of accounts. But it is contingency. You can't take. What do? You tell one, like, hey, no contingent liability. Provision. What is it? Provision can be taken into books of accounts. You can make provision. Why? Conservatism. Contingent liability is outflow of cash, no? Expense, expected loss. So you need to provide for the same. So you need, in order to create provision for a contingent liability, there should be two conditions. Number one, probable outflow, meaning there is a probability that this contingent liability will become your liability. There is a possibility that this contingent liability will become your only then you take home. Sorry, only then you make provision. Second one is there should be reliable estimate. Estimate as to know when you write some item in the balance sheet or P&L, you should write some value next to it. So what is the value? You should be able to arrive at that number. What is the value? You should give some number. If you can give that number, only then you will create provision for this item. Get that? So this is a very important aspect. Please do remember the definition of provision. Let's quickly have a look. Once again. One second. I didn't discuss the definitions, no? Let me go here. Okay. Tell me what is provision. First we'll discuss contingent liability. What is it? It is a possible. Everyone read, okay? I'll give you count. 1, 2, 3. Start. Done. Now same thing you remember and then see contingent asset. That possible obligation will become possible asset. Except for that one word. Rest of the definition is exactly same. Come on, 1, 2, 3, start. Great. Now let's see the definition of provision. Provision. Yeah, come on, read provision. Listen. Contingency is a possible obligation. Provision is a present obligation. Very good. Result in outflow of resources embodying economic benefits is probable. Further, very important word. What is that word? Reliable. You should be able to make a reliable estimate. And there should be probable outflow. See here, probable and reliable estimate. Those two keywords. If you write it in the chart, what I showed, no? If you can convert that chart into a sentence and then write also, you'll get full marks. What is provision has come in the exam twice. So little important, stick to that. And that's it. We discussed then. Then there is something called as Ind AS. One big 10-15 pages is there in your material. Don't waste time on that. Come on, fatafat. Last part, valuation principles. Last unit of your chapter 1. You need to record the items in your books of accounts. You need to measure it in terms of. There are several valuation principles. First one, you will record it at the price that you paid in the past. What is it? Price that you paid in the long ago when you bought it. You recorded it at one price. That is called as what? Price that you paid in the past. Sir, past ella yaake sriga. No, no, now you require it. The price at which you paid at the past, no, that is called as historical cost concept. What is it called as? Fantastic. Or right now, if you buy that product, sir, buy then we bought. No, 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 no. For example, I bought this laptop 2 years ago. The price at which I bought this laptop 2 years ago is my historical cost. I can record it at that historical cost of 75,000. Done. I can record it at the price at which I buy now. If I want to buy the same laptop, HP X 360 NV, 128 GB hard, sorry, 512 GB hard disk, SSD RAM 8 GB. Sorry, SSD hard disk and then RAM 8 GB. Little confused. So if I have to buy the same laptop, same model today in the market, how much would it cost? It might cost 82,000 rupees. Right? That semiconductor chip shortage, that this and all some nonsense business, everything is happening. That is a replacement cost. What is it? So the price at which I will buy now is called as replacement price or current cost. Or if I sell this asset today, what I will get is realizable value. Or in the future, whatever I get, no, from this laptop, whatever economic benefit that I'll earn in the future, I will discount it to present day and then record it. That is what we call as present value. What do we call it? So these are the four accounting concepts that we need to, four accounting valuation principles that we need to know. So the next step what we have is last part, guess the price. Sometimes no, you can't use these valuation principles to identify the value. When you can't use accounting valuation principles to identify the value, you go by accounting estimate. How do you do estimation? Simple. Past experience, present situation. Two things, past experience and present. In the past, you have some experience based on this. Correct or not? So now, if I ask you how much time will you take to reach this place tomorrow? How much time will you take? Where different answers for different people. Half an hour, some people, 1 hour, some people, 25 minutes, some people, 40 minutes, some people. Some people took more than an hour. You will tell that number. So I am asking how much time will you take tomorrow? You tell 1 hour. How did you tell? You told based on today's experience. Today's experience is already past. Why? We're at 11:30. You came at 7 o'clock, 8 o'clock. So it's already history, past. And tomorrow's situation, tomorrow Sunday, there might be lesser traffic. So today you took 1 hour, tomorrow tomorrow is not Sunday. Sorry. See, initially plan was made for Saturday, Sunday. So in my mind, it's running as Saturday, Sunday. Fine. So tomorrow is Friday. Because it is Friday, you might take lesser time. Just like that. Or because it is Friday, you might take more time. There should be lesser traffic on Friday. Why, sir? Just like that, guys. It would have been nice if the example was Saturday, Sunday. Unfortunate, my bad. So what would you do? You would easily chop off 10 minutes. Or you didn't know where to start, which bus to take, or how to walk from the place where you get down. Because you have little experience, you might take lesser time. Get that? Some people who came by riding and all, you used to look at map couple of times, so you took more time. So tomorrow you don't have to look into map. You know the road. So you take lesser time. So you make an estimate that today you took 1 hour, tomorrow you will take 45 minutes. How do you arrive at that estimation of 45 minutes? Based on your past experience and present situation. So that's the reason we call it an accounting estimate. Come on everyone, read 1, 2, 3, start. Existing situation and very good. The best example for this is depreciation, because depreciation is based on the cost of the asset, useful life and scrap value. That's what you do know. Depreciation is cost minus scrap value divided by useful life. Cost is an actual amount, can determine the cost, but useful life is an estimate. When you look at the asset, this microphone, what is the useful life? Depends. If I do mic drop on it will count. Okay, I am not at my den. Yeah, outside the den, I am no more reliant. So if I do mic drop on all like that, the useful life will come down. But if I say, oh baby, and then keep it safely, then it will come, useful life will be more. So useful life is dependent upon how we use. It's an accounting estimate. And scrap value, what is the value at which we can sell it at the end of the useful life? At rupee kg. Electric items. So it depends, no? Scrap value changes, useful life changes, depreciation will change. So depreciation is based on useful life and scrap value. When a single result is dependent upon two estimates, if one of the estimates changes, the result also will change. So that result arising is also an fantastic. So depreciation is an accounting. This calls for the end of your chapter 1. We have successfully completed entire chapter 1. You guys don't have to clap. We've taken little longer than what I expected because we started a little late. But we'll pull it up in the next part. So second chapter mein accounting process will not be wasting time doing journal, ledger, will not be wasting time. We'll run a little forward straight into little bit of discussion. Cash book, I'll tell a couple of important points that you need to note, and we'll be venturing into rectification of errors. I'll give you a short break here, about 10 minutes. 15 is too much. We don't have to have our own figure. We can have break till 11:57 also. You need not be worried. So I'll give you a break till 12 o'clock. Yeah, 11:45 it is. Take a 15-minute break. I know few people want a little longer break. We'll take our lunch break around 1:35, 1:45 to around that. We'll take a lunch break. I'll give you a good lunch break of 45 minutes. But our lunch break will be post completion of chapter 2. Hey, I didn't finish. I didn't tell you the break starts. Yeah, I'll already Dashwant or call ಮಾಡ್ಬಿಟ್ಟಿದ್ದಾರೆ. ಬರ್ತಾ ಇದೀನಿ. Yes. Door ತೆಗಿರಿ. Oh wait. You don't know. I'll say the break starts now. Till then you can't go. I have so many things to say. So I'm still showing this theoretical frameworks QR code scanner on your screen. So for these 2 days you're gonna eat, breathe, sleep, walk, go to washroom also with accounts. So what you will do is you can keep this sheet open. As we are done with chapter 1, try and answer all the true or false questions. So people who feel like the break of 15 minutes is long and then too much and nonsense and no need to you can finish this true or false. You guys get that? That's it. See you all at 12. Couple of rules which I've told you in person. I'll repeat. No eating in the class. Good morning once again. Welcome back to CA Foundation face-to-face marathon. Pre-break, we have successfully completed chapter 1. And now we'll start with chapter 2. After we've discussed, we'll just quickly see as to how the questions have come in the past.
Answer ನಿಮ್ಮ ಹತ್ರ ಪರ್ಮಿಷನ್ ಅದು ಆನ್ಲೈನ್ ಅಲ್ಲಿ ಅವ್ರಿಗೆ ರೂಮ್ ಹಾಕ್ತಾರೆ
ಇಲ್ಲಿಂದ
ಅಲ್ಲೇ ಇರ್ತೀವಿ ಯೂಸ್ ಮಾಡಿ.
Great. So they're doing a little bit of piracy here. They're streaming it live from class. Yeah, it'll however be provided the recorded version of the entire thing. So for the chapter starting now, I'll first show the examination analysis and then we'll start with the chapter discussion. But chapter 1, because the weightage is less, I didn't want you to see the numbers before we discuss. Have a look. Starting from May 18 till June 2022, this is how the questions have come. 4, 4, 4, 10, 8, 8, 4, 9, 4. You get that? This is the pattern of the questions from this chapter. And whenever we say question number 1, I am not including true or false questions. I am not including true or false questions. Other than the true or false questions, 1A will be 6 true or false questions of 2 marks each. After that 6 true or false questions of 2 marks each, there will be a couple of short notes questions or difference between questions. That's what is given here. Throughout, when I show analysis for any chapter, I am not including any questions from true or false. It's other than true or false. Do you get that? So that's what it is. There's an attempt where it came for 10 marks. And wherever I've given 1 and 6, remember that question number 6 is there, Even in that, they've asked a couple of theory questions. But in the recent attempt, they didn't ask anything in the last question. Entire theory came in only the first question, but it can come in first or last. So this is something that you can keep in mind. Whenever there is chapter 1 question, it will be part of question number 1 or question number 6. So question number 1 is compulsory question. Question number 1 is, so you skip chapter 1, theory, who will do? So you skip chapter 1, you can't answer question number 1. Question number 1, there's no choice. So you definitely lose marks. So without doing chapter 1, when you venture into examination hall, you are straight away writing examination not for 100 marks. You're writing for less than it. See, you leave consignment, you might still score 100. How? Consignment question, whichever comes, you leave that complete question and then write the rest 5. But when you skip chapter 1, you're straight away writing for less than 100 marks. Do you get that? and a lot of students take chapter 1 lightly, but this is the reason why I don't want you to take lightly. Then chapter 2 accounting process. Whenever I talk about chapter 2 accounting process, I'm talking about the entire chapter 2 other than rectification. Chapter 2 has 8 units: journal, ledger, trial balance, subsidiary books. Cash book is part of subsidiary books, but we have a separate unit on that. And then we have our rectification of errors also. So rectification of errors, I'll give it as a separate chapter. Now when you see this marks for chapter 2, this is other than rectification. Rectification I've given separately, 2.8 or 2.6 actually, but we'll treat it as separately. So from other than rectification, this is the pattern. And whenever you see any examination paper analysis for the rest of the 9 chapters also, what I'm going to do, I don't want you to consider anything that is given for May 18 till November 19. Don't consider these first 4 attempts. For any decision that you want to take, don't consider this first 4 attempts. The reason is, I told you there were a couple of units and one chapter which got removed: royalty, joint venture, and accounting ratios. Those 2 units and one chapter was part of your syllabus till November 19. November 19 onwards, post November 19, those 2 units and one chapter got removed from your syllabus. So what I want you to do is, don't consider this, because when those 2 units and one chapter was there, no, the mark allocation, the schema that was followed in the question paper is quite different. Accounting ratio based question usually used to come in question number 6. So they were restricted to only question number 1 to ask the chapter questions. And in the first 4 attempts, no, they had also asked pure journal entry question. Meaning, they have given 4 transactions, you need to pass 4 journal entries for 4 marks. Lottery, no? Don't expect that now. No, ICA is like, change that. Okay, fine, we'll not give all that kind of easy questions. If it is journal entry based question in CA foundation now, it will either be in the chapter of goods sent on return or approval, or it will be in company accounts, issue of shares, or it will be for rectification of errors. Otherwise than that, they won't ask you any journal based question. So don't expect a straightforward question on journal. So let's not consider that first part. What you can see is theory questions can come, meaning chapter 1 may, if it is there, sorry, question number 1 may, if it is there, it is a theory question. So 1 and 6 is where the questions have been asked from chapter 2. In the recent attempt, June 22 attempt, what we'll be discussing in the tomorrow's class, entire paper, 120 marks. I'll even show you the solution of a student corrected by ICI. I'll show that in the class tomorrow. So when we do that, what you need to notice, this has come for 4 marks, a correcting balance sheet, trial balance question. Meaning the trial balance is given, some debit balances are wrongly written on the credit side, some credit balance is wrongly written on the debit side, closing stock is wrongly included in the trial balance. We need to redraft the trial balance for 4 marks. This is the kind of question that had come in the attempt. Otherwise than that, from this chapter 2, they've asked questions in the past on purchase return book and purchase book. Purchase return book, purchase book. Do you agree? Do you understand how it is to be prepared? Same, the date, particulars, invoice number, and amount part. And cash book also, they've asked questions in the past once. Great. So we'll also see what questions have been asked and then discuss. But our focus will right now be on rectification of errors. But I told you, though rectification of errors is what we focus on chapter 2, we can quickly run through some important parts of chapter 2. This is the PDF that I'll share with you people later. You guys remember the entire accounting cycle? It's part of chapter 1, which I didn't discuss here. Regular class we discuss. We start with journal, then go to, after that, trial balance, then final accounts. Journal, ledger, trial balance, final accounts. Fantastic. And that's what we call recording, classifying, summarizing. This is it. And then analyzing interpretation comes after final accounts. So the questions that you can expect is usually based on cash book. Cash book is like cash account. There is no difference between cash book and cash account, literally, in the questions that they prepare. They're almost the same. But whenever they use the word cash book in the question, remember to use the word receipts and payment in the answer. When they mention cash account, then you write debit, credit, and then write particulars amount, particulars amount. And whenever you use the word receipts and payment, in the cash book, you don't have to write 2 sales account, 2 purchase account, not necessary. Just write 2 sales, 2 purchase. It will be fine. And whenever you use the word cash account and write debit, credit, you would have to write account to every item that you write in the ledger as well. This is the rule. But in the past examination, it's so observed that the question mentions cash book, but in the answer they prepared cash account. You get that? So ICI sees no difference between cash book and cash account. So if you prepare cash account, it's still fine. And also one of the mock test paper, it is so happened that what they asked in the question was cash book. They prepared cash book, receipts, payment, but answer still had mention of debit credit on both sides. So what do we do? Simple. I would say remember that cash book and cash account are little different when it comes to the headings. Cash account will have debit credit, cash book will have receipts payment. But when you have to prepare, if they ask cash book, you prepare with receipts and payment, and if they ask ledger, you prepare with debit credit only. And remember to write the word account in each item if it is cash account. Do you get that? Yeah. However, simple cash book question is not what we can expect. We can expect questions on 2 column or 3 column cash book. Now tell me, 2 column cash book will include what 2 columns? It can include any 2 columns. It can be cash and bank, cash and discount, bank and discount. In a practical life, you get that? Usually when they ask in the exam, 2 columns will be either cash and bank or cash and discount. That's how it will work. When they ask a 3 column cash book, it will be cash, bank and very good. So one important point is, now tell me, there is discount allowed. Which side of cash book do you write? Receipt side or payment side? Discount allowed. Payment side. Why? Discount allowed means you give them discount. Discount received, receipt or payment? This is the biggest mistake that everyone do. Congratulations, all of you have done the same mistake. Remember, in a cash book, when you prepare discount column, when you insert discount column in the cash book, discount allowed or discount received is not receipt, not payment. Discount allowed and discount received is not a receipt and not a discount allowed is an very good. Discount received is an income. Income, credit, expense, debit. So discount received is an income. You will write it credit side. Credit side meaning payment side. Discount received is income. You should write on the credit side meaning payment side. On the other hand, discount allowed is an expense. You should write on the debit side. Debit side meaning receipt side. Sir, but discount allowed means, that's what I'm trying to tell. Don't see it like allowed means what to say you paid, received means you received. No, it is expense and income. It is expense and income. Now tell me, I will give you 100 rupees. I will give you against 120 rupees that I am supposed to pay. You gave me discount or I gave you discount? You allowed me discount. I am supposed to pay you 120 and I pay you 100. So in your book, in your cash book, is it a receipt or a payment? Receipt. In your receipt side, when you write my name, receipt side or debit side, and then write 100. Next to that 100 on the debit side in the discount column, you'll write 20. You get that? So come on. What is the important mistake that many people do? See, I knew this. Discount received is not a receipt. Read this point, everyone. 1, 2, 3, start. Very good. Yeah, I knew this. People will do this blunder, and I thought at least you people were smart, but you people also. I knew it. That now if I ask, you'll still say the same mistake. So discount received is income. It should be written in credit. Discount allowed is, you should write on. Very good. That's what you should remember. And that's it. So cash book based questions. Let's see what questions have come in the exam in the past. So this is all RTP and MTP. So no true or false questions has come from journal till date. Then journal entry based question was asked once, but it's in RTP, MTP. I'll tell you which one was asked. RTP may again repetitively asked 3 times. RTP is considerably lesser difficult in comparison to your examination. See, if I have to grade the difficultiness, RTP, MTP is below that. Mock test paper questions are even less difficultier than RTP. Easiest is MTP questions. Little difficult is RTP. Upon that comes your ICA examination. Upon that comes SS mock test. Hey, you might have seen, haven't you seen our mock test till now? It is way difficult, no? Correct or not? So, what is the difficulty level? At the bottom comes mock test paper. Then comes RTP. Then comes ICA suggestion. Then comes our mock test. It's way more difficult. Our questions will not represent examination type questions. Our mock test will represent more difficult questions than the examination questions. You get what I'm trying to tell? Yeah. In fact, in the recent MTP, few people skipped the class and also went on to attend. Weren't you disappointed that the examination standard was not up to mark? The questions were actually easy. And BRS question, that last adjustment was wrong. VRS question, that last adjustment was wrong. And one more thing was also fine. Let's keep that aside. No offense. Because the one who sets the mock test paper, question paper for ICA mock test is not the same person who sets the main exam question paper. No, 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 no. They are not the same. They're not the same. You get it? So whenever you solve any mock test, let that not be a decisive factor to judge the examination. If you want to feel the examination vibe, solve exam question. Yeah, we will do a lot of them, and I'll share this file with you which has all the past exams, RTP, MTP and suggested answers, and answer file will be separate, it's not included, so that you can solve it on your own and then check with the answer. So let's see some exam questions. These are all RTP questions. This is an exam question. Look at this. I told you, no, once there was a journal based question asked in the exam. This is the one. I don't really think we should waste time on this. You see, furniture purchased on credit, posted. Oh, this is a rectification based question. But couple of state journal entries are also there, and MTP, cash book. Let's see what is the exam question that was asked here. This is RTP. This subsidiary books mein RTP question. One moment. May 2020 RTP. Trial balance based question. Okay, I have missed out on that one question. There's one question of purchase return book which has come in the past exam. Simple. There are 4 purchase return transactions. One purchase return is for credit purchase. One purchase return is for cash purchase. Would you write that cash purchase return entry? You would not write that. And there is one more asset return, asset purchase return. Would you write that? No, you would not write that. So basic point is purchase account, sales account, sorry, purchase book, sales book, purchase return book, sales return book. You write only credit transactions of goods. If it is cash transaction or if it is not relating to goods but relating to assets, we should not be writing it in the purchase book, purchase return book, sales book or sales return book. Credit note relates to what? Debit note relates to simple. What is the journal entry for sales? Cash account debit to sales. If it is credit sales, debtors account debit to. If it is sales return, you will reverse the entry. It will become sales return account debit to debtors. Sales return account debit to, you credit debtor, you issue credit note. What is the journal entry for purchase? Purchase to cash. If it is credit purchase, what would be the entry? Purchase. If it is credit purchase, purchase to creditors. Purchase return, ulta. Creditors to purchase return. You are crediting purchase. Sorry, you are debiting creditors. You issue them debit note. You get that? So debit note is issued when the goods are purchased but returned. Credit note is issued when the goods sold are returned. Sales are returned. You get that? So that's the part, and lot of questions to run through. Trial balance based question. Now let's quickly get started with rectification of errors. Shall we? Okay. One moment. It's still taking a little time to load. Yep. Errors. Errors are unintentional mistakes. There are plenty of mistakes that can happen in the business organization when we are recording their transactions. These mistakes can be intentional or unintentional. Intentional mistakes are called scams. Unintentional mistakes are called as errors. And what we discuss are errors. There are 2 types of errors. One is non-clerical error. Second one is clerical error. Non-clerical error means this error didn't happen because of the clerk. This didn't happen because of the clerk. This can happen in manual accounting. This can happen in computerized accounting also. Clerical errors means this happened because of the clerk. It happened because the clerk is doing the entire accounting, this error is happening. If the entire accounting is done in an automated computerized manner, this error will not happen. You get it? So now, what are non-clerical errors? Simple. Principal errors. It's not that principle, it is this principle. PLE, not PAL. Principal errors are non-clerical errors. What are principal errors? There is a capital item. You purchase an asset. Can you by mistake, can you treat it as revenue item? Yes. You purchased one car. You should write asset, car account debit to cash. Instead of writing car asset account debit to cash, you wrote traveling expense account debit to cash and wrote it to P&L account debit side. Possible? Yeah, possible. This can happen when you do manual accounting. This can happen when you do computerized accounting also. This can happen in either of the forms, manual or computerized accounting. That is the reason we call it principal error. Principal error is it a capital item being treated as revenue or vice versa? What is it? Transaction in contravention of accounting principles. That is capital and revenue principle. What is an error of principle? A capital item being treated as revenue or vice versa. You buy a car, you write in P&L account, or you get the car repaired. Where do you write? P&L account debit side. Instead, you wrote it to the value of the car in the balance sheet. That again is error of principle. Do you get it? Great. Error of principle is capital item being treated as revenue or revenue item being treated as capital. Remember this? There. On the nostalgia peel. Yeah, example is also the same. Repair expense added to the asset or asset purchase recorded in purchase book. Next, there are clerical errors. These clerical errors can happen only in the manual accounting. In the computerized accounting system, no, these errors will not happen. What are these? These are three. Omission. Omission can be two types. Complete omission, partial omission. What do you mean by complete omission? You did one transaction, but you completely forgot to record it. There is a purchase transaction. Purchase account debit to cash is the entry. Or you should write purchase to creditors. You completely didn't write the entry. What did you do? You did the transaction and you forgot. That is error of complete omission. This is what we call a two-sided error. What do we call this? Then we have partial omission. See, like this, omito, purti. Palak paneer thindi ansute. Completely not recording a transaction in the books of accounts. Yeah, this is a two-sided error. Because of this, the trial balance will still tally. However, the next one that we have is error of partial omission. What do you mean by partial omission? You recorded it, but half. You recorded debit, but you didn't record. Or you recorded credit, but you didn't record. You wrote in purchase book, didn't post it to creditors account. You wrote in sales account, but you didn't post it to debtors account. That's a possibility. Or you wrote it in sales book, total debt, didn't write to sales account. You wrote it in purchase book. Total of the purchase book should be posted to purchase account. You wrote it correctly in purchase book. You wrote it correctly in creditors account. But the total of purchase book should be posted to purchase account. You forgot. If this happens, it is called as error of partial omission. For instance, you purchased goods. What is the journal entry when you purchased goods? Purchase account debit to cash. You made the payment online through bank. Purchase account debit to bank. You placed the order on Amazon. Purchase account debit to bank. You wrote it. You are writing the entry purchase account debit. After that, oh yes, explain. You took the delivery of the goods and you started looking at the goods. Your entry is incomplete. You wrote purchase account debit. You didn't write bank account. So debit aspect is recorded, but the credit aspect is error of partial omission. Very good. Great. So then we'll go to the next part. See, partial omission. Not recording a part of the transaction in the books. Read the example. 1, 2, 3. Start. Got that? Great. So next we would go ahead and then discuss error of commission. Error of commission means you have recorded it, but wrongly you recorded it. Wrongly, that's what we talk about. Tappagi. Yes. So wrongly you recorded a transaction. You recorded it at wrong amount, or you recorded it in wrong account. So when you record a transaction at the wrong amount or in the wrong account, it would become error of commission. It would become error of. Very good. For example, the transaction is for 450 rupees. You wrote it at 540. Why confusion? 440, 540, 360, 630, 210, 120, 890, 980. Lot of questions in your material also like that. 910 was wrongly recorded, 190. These are errors of commission. The second error of commission is you had to record it in RAM account. You recorded it in Sham account. That name went wrong. Why? Even when you do in the accounting process, when you type RA, so many suggestions will come. You need to type enter. You selected the wrong order and then tap enter and then close. Correct or not? So this should happen. So errors of commission is transaction recorded either in the wrong account or at the wrong amount. Sir, straight away we'll do rectification, sir. Why do we do this? Hey, there has been a question as which has come in the exam in the past where the errors are given. You need to write whether it is omission, commission or principal. Oh, easy. One word you write omission, 1 mark, commission, 1 mark, principal, 1 mark. The simple cell write omission slash commission slash. They'll also write May slash June slash November slash. They would also do that. So let's not get into that zone. It's quite easy to identify. It's just about 5 minutes of discussion. Then the last error is compensating error. Compensating error are not self-revealing errors. Compensating errors are not, meaning these errors don't reveal that there is an error. It's very difficult to find these errors. You know why? One error is there. One more error has compensated to this error. See, assume that I lose this one earring. Okay, it is easy to identify, like one kade ide, one kade illa. Ee kade tegadu bisakbidutte. Then it's difficult to identify that one is there, one is not, correct or not. So like that, there is one error that has happened. You have recorded a receipt as a payment, or recorded a payment as a receipt. To compensate that, no, you done confirmation of ulta. For example, you received 100 rupees. You should write cash account debit. You didn't write cash account debit. Instead, you wrote cash account credit. The error didn't stop there. Then you made some 100 rupees payment. Then you should write cash credit. There you wrote cash debit. So total cash looks correct. But individual two accounts there are errors. In fact, there is no one error. There are two errors. It is actually difficult to even identify this error. Leave correcting. Difficulty identification itself will become a little difficult. See, do you get it? So that's with regard to the last one, compensating error. What is it? Effect of one error is cancelled out by. Very good. Example 1, 2, 3, start. Got that? Doubt? Nice. Very good. So we need to rectify these errors. And in order to rectify the errors, we should also identify the impact of these errors on the trial balance. Now, some errors will affect trial balance, some errors will not affect trial balance. The errors which will affect trial balance are called as one-sided errors. Errors which will not affect trial balance are called as two-sided errors. Whenever it is one-sided error, no, because of this error, our trial balance will not tally. If it is a two-sided error, in spite of this error, our trial balance will still. So just because our trial balance tallies doesn't mean that it is error free. There can still be two-sided errors. There can still be one transaction is completely omitted, not recorded. Then what will happen to trial balance? It will still tally at wrong amount though. So that's it. Impact of errors is two, one-sided and two-sided. What are one-sided errors? In spite of one-sided errors, what will happen? Trial balance will not tally. Okay. If it is two-sided errors, trial balance will still. Sometimes they'll use the word tally, sometimes they'll use the word agree, disagree. Agree means tally, disagree means does not tally. You get that? Great. Now tell me, principal errors, one-sided, two-sided? Principal errors, two-sided errors. Principal errors are, sir, what are two sides? For example, same example, you bought a car. Car to cash is the entry. You wrote traveling expense to cash. Sir, what are two errors here? Number one, you should have written car account debit. Pardila, error number one. Error number two, you should not have written traveling expense. You have written traveling expense. So it is a two-sided error. What you think is two-side means debit side, credit side. I never told that. Two items are affected here. It's a two-sided error. In spite of this error, can you hear me? In spite of this error, our trial balance should still tally. You get that? I'll give you something to read about. Trial balance will agree. Then come on. Tell me the next one. Error of complete omission. One-sided, two-sided. What is it? One-sided, two-sided. Error of partial omission. Check. Yeah. So this is trial balance will agree here. Not audible, not audible. Partially audible. No, the green light is there. So the battery is there. Hey, where is the mic? Is the mic working there? Can you hear me? There. Check. This is working. This is not working. This is not working. Huh. So trial this also is understood. Let me check. Give me a moment. Someone please help me with this. Try to find it. Check. I think we'll work this for some time. We'll find some solution meanwhile. Yeah, let that get charged later. Anyone knows the point? Where is it? Ali, give it. Yes. This is working for time being. Let's charge that up. Thank you for staying quiet. Huh. So error of complete omission, as I told you, it is not completely recorded. It is because in spite of this, the trial balance will still tally. What about error of partial omission? Error of partial omission. Trial balance will not tally. This is a revealing error. Whenever there is this error, trial balance will not tally, and you can easily identify the same. How about compensating? How about commission error? Commission error can be both. Can be one-sided, can be two-sided. Whenever you write wrong account, it is a two-sided error. Trial balance will tally. Whenever it is about wrong amount, you need to see whether the wrong amount is at only one place or it is the wrong amount at both the places. If the amount is wrong at both the places, then trial balance will still tally. If the amount is wrong on one side but correct on the other, the trial balance will disagree, not tally. That's what we call as one-sided error. So partial omission and errors of commission are basically one-sided. Two-sided are errors of principal, complete omission, commission, and lastly our compensating error is also a two-sided error. Clear till here? Now we'll quickly get into what to say rectification of these errors. So how we rectify these errors is dependent upon the stage at which we identify this error. If we identify the errors at an early stage, we can do this by the way of adjustment all by itself. Meaning we identified the error even before we prepare ledgers or trial balance at the journal stage all by itself. We'll rectify them instantly. However, if the error is identified a little later, meaning that is after our yes, please, mic stop working. Yeah, we'll take a short interval for about 5 minutes. Let me just please this. Okay, guys, let's get back to our rectification of error. So, if the error is identified at stage 0, that means like you did the error and you realized it instantly. What do? Scratch it and then rewrite the same. So, this doesn't need any accounting. It doesn't really matter whether it is one-sided or two-sided. Either of the sides should scratch it and then rewrite it. This is not part of your material. This won't be part of your examination also. What we're going to start with is stage 1. Stage 1 is the error is over and you identified that you made an error at a little later stage. Correct or not? You identified that you made an error at a little later stage. You guys really feel like I don't know what you guys are doing. I can literally see him talking there. I can see that she there at the corner is using her phone since last 30 minutes. I don't know. You guys, I might be new to you, but students as such are not new to me. People who seen me in class know it, people who haven't might still feel like you don't You think that I won't realize. I do ignore Rajavardhan. Yeah, stage one. We are discussing about before trial balance. So you did do trial balance, and before you did the trial balance, you realize that there is an error. So there is no possibility of trial balance tallying, not tallying. It won't come only. So if it is one-sided error, we can't pass journal entry to rectify this. They won't even ask rectification entries. You know why? To pass journal entries, we know that we need two aspects. But the error is with only one aspect. Purchase book is undercasted. Sales book is overcasted. Cash deposit is been omitted to be recorded in cash book. Or 670 rupees recorded as 716 specific ledger. We can't really do these rectification entries for this because error is only on one side. We do adjustment. What do we do? Meaning now purchase book mein there is error. You can't rectify it in purchase book because total of purchase book will go to purchase account. We'll rectify it in purchase account. Sales book as an error. Rectification will be in sales. Purchase return book as an error. Rectification will be in cash book as an error. Rectification will be in cash account. Only in that ledger we do adjustment. Sir, what do we write in that ledger? Simple. By rectification to rectification. That's it. You don't have to write any ledger account. It's an error that is rectified by adjustment, one-sided error. However, if it is a two-sided error, if it is a, then we can pass an adjustment entry. And if it is after trial balance, if it is after, it doesn't matter whether it is one-sided or two-sided. You can pass journal entry for both. How come? If it is one-sided, we have only one aspect. But because of that one aspect, which was not there, our trial balance didn't tally. And whenever trial balance doesn't tally, what do? We transfer it to suspense account. And now we have suspense account and also that error. We have two accounts involved. We can pass journal entry. So if it is a one-sided error identified after trial balance, we pass journal entry with. If it is a two-sided error identified after trial balance, we'll just pass journal entry. Journal entry without suspense. And then comes stage 3, which is after final accounts. If it is after final accounts, if it is one-sided error, again we pass journal entry with suspense. If it is two-sided error, we'll pass journal entry without. Sir, then stage 2 and stage 3 are same. Then why did you wrote it as two different stages? You can just write after trial balance, before trial balance. After final accounts, our accounting will be little different. Why? See, we discussing it in periodicity concept that financial statements are prepared for each period. At the end of that period, that year's financial statements are closed. P&L account is done, freezed, profit freezed, balance sheet frozen. Now later, if you identify an error, then rectify it. We can't change the previous year's financial statements. We can't change the P&L account items, especially P&L account items, because nominal accounts are closed by transfer to P&L. Real and personal accounts are balanced. You write balance carried down, balance brought down. But nominal accounts, we close them by transfer to trading P&L. If you write these purchase account, sale account, or any other expense account or income account in our rectification entry, they will not correct our previous year errors. In fact, make a new error in the current year. For instance, previous year we recorded purchases at 10,000, but actually the purchases are 12,000. What is the correct amount of purchase? But you wrongly recorded at 10. When is this happening? Last year. In this year, if you write purchase account debit to whatever that creditor and then rectify the error, it will not change our last year's purchase. It will increase current year purchase, because of which our current year profit will become incorrect. And last year profit though is already incorrect. So in this rectification entry, what we do at stage 3, we cannot use nominal accounts in this rectification entry. In the rectification entries that we do at stage 3, we cannot use nominal accounts. For instance, purchase, sale, purchase return, sales return, any expense or income account. All of these ledgers will be replaced with P&L adjustment account. This will be replaced with? Yes. Okay, quick summary. In rectification at stage 3, we can't use nominal accounts. In rectification at stage 3, what can we not use? Example, purchase, sales, purchase return, expense and income. What will it be replaced with? Yes. Profit and loss adjustment account. Profit and loss? Fantastic. So if you have to pass journal entries, what are the steps that you can follow? These steps are working note. You don't have to disclose this in the examinations answer script. You straight away write rectification entry. But however, you cannot hit the bullseye straight, right? So we practice a lot. So that practice is this working note. You don't have to disclose this as a part of your answer, but it is okay to disclose it as a part of your answer. So step 1 is identifying what's wrong. Step 2 is reversing what's wrong. And then once you reverse the error, the impact of the error has nullified. Then you pass the correct entry, what you should have done. And this step 2 plus step 3 is our rectification entry. For instance, I was supposed to keep my phone here, but instead I kept it here. So the wrong entry is keeping it here. I should reverse what I've done wrong. And then I should do what is right. So basic rectification is lifting it from here and keeping it here. That is reversal of the error and doing the right thing. Don't be tensed, phone won't fall. So the correct entry or rectification entry is reversal of the wrong entry plus the correct entry. So till now we did lot of theory. Come on, let's now quickly do problems on rectification. Meaning I would make you run through the problems. So what will we do is we'll see some examination questions and also see their answers. If I start writing also, we'll waste a lot of time in writing. So let's run it through. We'll straight away hit exam once. Come on. This is an exam paper. Miss Daisy, look at the question. This question is from May 2018 exam. You don't have to write anything. All you need to do is stare at the screen. All you have to do is sit back, relax, enjoy. Keep your hands on that pillow that you have on your face and relax. Miss Daisy. Miss Daisy was unable to agree trial balance. Aha, what does that mean? So this is not stage 1, stage 2. Why? Trial balance is already prepared. So even if it is one-sided errors, will pass only journal entries. Then comes the next part of the question. Last year. Oh, so this is stage 3, meaning trial balance is prepared, final accounts is also prepared. Usually people complain, sir, I understood rectification, but I'm not able to figure out the stage of rectification. The information will be given to us in the question. Sometimes directly, majority of the times indirectly. They have not directly told final accounts are prepared, but they told last year. It means that the financial statements are already done and the error is identified in the subsequent period and wrote off the difference to P&L account. This itself an error. This itself is an, so this error will rectify at the end of it. So majority of the people, if this is an examination question for how many? 6 adjustment. This is a 12 marker. People get 8, 9 or max 10. No one gets 12. No one in the sense 99% won't get 12 on 12 on this. You know why? You see this, okay, rectification last year. So stage 3, you read adjustment number 1, 2, 3, 4, 5, 6, write 6 journal entries. The marks here is not given for 6 journal entries. Marks here are given for 7 journal entries. So what is the 7th journal entry? 7th journal entry is here. Now tell me, whenever you prepare trial balance and the trial balance doesn't tally, what do? Transfer the balance to? Very good. Why? There is difference, but you don't know why is there a difference. In the subsequent year, when you identify the reason for difference, you rectify. When you rectify, that suspense will become nullified. Suspense will become 0. For example, there is purchase of 10,000 which you have not recorded. So debit will be difference, no? In your trial balance, suspense will come on the debit. Debit side, there is shortage. You write suspense, debit 10,000, close it. Next year, you identified that purchases was wrong. Oh. Then you will write purchase to suspense or P&L adjustment to suspense. Suspense, what was debited when we created trial balance, will get credited and it will get closed. 0. Nullified. Clear? But what this person, Miss Daisy, has done is transferred it to which account? Tappo. Tappo. So because of this, their last year's profit balance is wrong. Because of this, last year's P&L balance is wrong. Where do we transfer profit to? Capital. So last year capital has become wrong. And last year's capital will become opening capital of this year. So opening capital in the current year financial statement is also wrong. And in every rectification entry, when we use suspense, we are closing suspense. But here suspense open hai madila. How can you close something which is not yet open? So after you pass all these 6 journal entries, no, you know what will happen? Suspense account is now open. So we would have to close that suspense account by transferring to capital account. Remember, they should have written it to suspense. They have not written to suspense. They have wrongly written it to capital. Because they have wrongly written to P&L and capital has become wrong. Now after we rectify, suspense account is not closed. So previously, what should have gone to suspense has gone to capital. Now what should go to suspense will transfer to capital. So capital will get adjusted. Capital will get. Konedagi, what I'm trying to tell is, after you write this 5-6 rectification entries, you need to write one last entry of transferring the suspense balance to capital account. This you need not do in a normal problem. In a normal rectification problem, you don't have to do that. But in a problem where trial balance is wrongly closed by transferring suspense to P and L, we should close our suspense by transferring the balance to capital. Let's see the entries. Let's see the first error. Purchase account was undercast by 8,000. Purchases has been undercast. Undercast means decreased. Purchases has been decreased. What should we do? Purchase has to be increased. In order to increase, what do we do? Purchase has to be debited. Shall we debit purchase? Very good. So usually the entry will be purchase account debit. Credit will be suspense. Why? It is a one-sided error. We cannot write purchase to creditors. It is purchase account debit to suspense account. But it is rectification at stage 3. We cannot use purchase. We'll replace purchase account with. So what is the rectification entry? P&L adjustment to P&L adjustment to, have a look. P&L adjustment to suspense. 8,000, 8,000. Is that the amount? Very good. Shall we see the second error now? Come on, come to second error. Sale of goods to Rahim. My hands are also a little handicapped, okay? To do that selection, I need 2 hands. One hand mic itಕೊಂಡು ring ಮಾಡಿ. ಏನಪ್ಪ? ಚೋಬಲ್ ಇಟ್ಕೊಬೇಕಾ ಹಿಂಗೆ? ಭಯ ಸರ್. ಮೈಕ್ ಡ್ರಾಪ್ ಅಲ್ಲ, ಶರ್ಟ್ ಹರಿದೋದ್ರೆ. Yes. Jebu. Nice. Come on. Read this. Sale of goods to Mr. Rahim. You have sold goods to Mr. Rahim. 2,500. What happened? Rahim only, no? Rahim was omitted to be recorded. It's a transaction completely omitted. Wrong entry. No entry. Reversal of wrong entry. No entry. So correct entry itself is rectification entry. What is the entry for sales? Debtors account debit to sales. Here debtors name is Rahim. Entry is Rahim to sales. So can I write sales account because this is rectification at stage 3? I should replace sales with? Yes. So I would write Rahim account debit to Rahim account debit to P&L adjustment. I don't have to touch Rahim account. Rahim account will not be replaced with P&L adjustment because Rahim is personal account. Rahim is, got that? This is not a one-sided error. This is two-sided error. This is again problem. How many of you face this problem? Sir, I do rectification, but I don't know whether it is one-sided, two-sided, ಸ್ವಲ್ಪ confusion. I don't know whether it is one-sided error or two-sided error. No, I myself had encountered a lot of people coming to me. This happens because of little lack of practice. Because usually when we start in the class, we'll first do one-sided errors before trial balance. Then we do two-sided errors before trial balance. Then we'll do one-sided errors after. We do that stage-wise. But later problems are there, no, last 5-6 problems. Those also have to be practiced for you to easily identify one-sided or two-sided. You start reading them, you start doing them over a period of time by practice, you will be able to easily figure out whether it is a one-sided error or a two-sided error. In this case, they have told complete transaction is omitted. So it is obviously a two-sided error. But in the first case, what was told? It was very clearly mentioned that the purchase book was undercast. There is no mention about creditor. When they have not mentioned anything about creditor, it means that it's correctly recorded. If there is an error, they would have to tell that there is an error. We will never assume that there is an error. Don't assume that there is an error. Error has to be mentioned, correct or not. So if you assume that the error is there in creditor, also assume that wrongly recorded also, wrong amount also, recorded 10,000 also. Assumptions has no end. You can assume anything. So assumption need not be made about an error. Error has to be mentioned to us in the question. Come on, let's quickly see the third one. Receipt of cash. Receipt of cash from Mr. Ashok. Hechilla. Asok, numerology, was posted to the account of Mr. Anbu. So much of difference. How did I get confused? They typed A, whichever account got selected, they typed enter. Mogit. Yeah. So receipt of cash. What is the entry for receipt of cash? Cash account debit to Ashok account. Am I right? But have they written Ashok account? They have wrongly created Anbu. So they have written cash to Anbu. They have written cash to. Let us reverse that. It will become Anbu to cash. It will become. Now tell me what is the correct entry? Cash to Ashok. So our reversal of the wrong entry is Our reversal of the wrong entry is Anbu to cash. Correct entry is cash to Ashok. Correct or not? No. Did I tell something? Receipt of cash from Ashok. Correct entry is cash to Ashok. Reversal of wrong entry is Unbo to cash. So here cash is credit. There cash is debit. We'll remove that. Entry will be unbo to Ashok. If you don't want steps wise, you can straight away think. Listen, someone is paying you cash. Who's paying you cash? So Ashok account will be credited. Have we credited? We'll credit. Ashok account has to be credited. Have we credited? We will credit. What have we done? Unbo account. What have we done to Unbo account? Credited. Should we credit? Wrongly credited Unbo? Debit. Should have been credited Ashok, not credited? Credit. Entry is? But this is rectification at stage 3. Shall we change it to P&L adjustment? No. Why? It doesn't involve any nominal account. See, it doesn't involve any nominal account. It only involves personal accounts. Straight away entry is Unbo account debit to Ashok account. Got it? Great. What do we have after that? Come to adjustment number 4. Amount of rupees 4,167 of sales was wrongly posted as 4,617. These are little tricky ones. Now tell me what is the correct, first in these kind of things, no, identify what is the correct amount. What is the correct amount? 167 or 617? Correct amount is 167. But it is wrongly recorded at? Okay. Have we increased the sales or decreased the sales? Increased by how much? Difference. 4617 minus 4167. 450 rupees, we have wrongly increased our sales. We have wrongly increased our sales by 450. We should decrease our sales by 450. We should decrease our sales by, how do we decrease our sales by 450? Debit sales account. Debit, credit, they have not told anything. Debtors account ali mistake illa. So we'll write it to suspense. So the journal entry is sales account debit to suspense. Sales account debit to, understood? 450, 450. But this is rectification at stage 3. We cannot be using sales account. We'll replace sales with? Very good. We'll write it as P&L adjustment account debit to suspense. 450, 450. Got it? Shall we go to 5th error? What's with 5th one? Repairs to machinery. When there is a repair expense to machinery, what should be the correct entry? Repair account debit to cash. Repair account debit to cash. Repair money you should pay. Repair is expense. Expense, debit. Cash, asset going out, credit. So, repairs account debit to cash is the correct entry. What have they done? Debited to machinery. They thought you got the repair done, machinery value increased. Noda, machinery value increased. That's not correct. So, machinery is wrongly debited. Machinery is wrongly. What should we do? Credit machinery. What should have been debited? Expense, that is repairs. Have we debited? What do we do now? We should do now. So what should we do? Repairs account debit to? Very good. Repair expense was not debited, so we debited. Machinery was wrongly debited, so we credited. Repairs to machinery. But can we debit repairs account? We cannot. Why? This is rectification at stage 3. At stage 3, nominal accounts will be replaced with P&L adjustment. So I will be replacing my repairs to with P&L adjustment, and the entry will be P&L adjustment to machine. How much is that? 1000. Lucky duck, you people. There is no depreciation adjustment in this one. This question, a similar question in our ICA material has depreciation adjustment. I'll tell that to you later. But whenever this kind of stage 3 rectification is there, what is there? Stage 3 rectification is there. And capital revenue based expenditure wrongly written as capital, when such a thing is there, be cautious to check if there is any depreciation adjustment. Is there any depreciation adjustment in this one? So no, don't worry. Repairs was wrongly debited. Repairs was supposed to be debited, not debited. We will debit. Machinery was wrongly debited. We will credit. Repairs to machinery, change it to P&L adjustment to machinery. See, the entry is P&L adjustment to machinery 1800. Correct? Everything is fine. I'll tell you after we finish the problem as to what is it with regard to depreciation. Remind me if I forget. Remind me if I forget. Okay. Then next, he reminds me. Okay. Next, repairs to machinery. Aita. Last one. Oh, last one. A credit purchase. Yay. A credit purchase of goods from Mr. Paul was entered as sale. Something they've done wrong. Big thing. So there is credit purchase. What is the journal entry for purchase? Purchase account debit to Paul. Purchase account debit to Paul. What have they recorded as? Sales. Meaning they have written Paul account debit to sales. Correct or not? So the correct entry is purchase to Paul, but the entry that they passed is Paul to sales. So have they passed purchase to Paul? No. We will write purchase to Paul as our entry. But they've wrongly written Paul to sales. We'll reverse that. Sales to Paul. So the entry should be sales account debit, purchase account debit to Paul account. Why? It is purchase. We should have debited, but we have not debited. It is purchases, which should have been debited, but it is not debited. We'll debit purchases now. It is not sales, but sales is wrongly credited. We'll debit sales to nullify the sales. Paul account na ಏನು ಮಾಡಬೇಕಿತ್ತು? We should have credited Paul, no? We have wrongly debited. So we should do double the amount. We should do. How many of you have a trouble identifying? Sir, fine, but when to do double the amount, when to do once the amount is little tricky? Very simple. You need to think little wise with regard to directions. See, if it has to be debited but not debited, you do once. If it has to be credited but not credited, do it once. If it has to be debited but wrongly credited, or if it has to be credited but wrongly debited, you done something wrong in the opposite direction, then you would have to do double the amount. For example, from this junction, I need to take right turn and then go 100 meters. I didn't go. What will I do? I'll go now. But I took left turn and then wait 100 meters. Now on rectification, I should take a U-turn, that is towards the right side. I should go 100 meters to come to point 0, go another 100 meters to come to the right junction. So all that you need to check in the question is, it is okay if they've not done what is to be done. It is okay if they've not done what is to be done. Have they done it wrong is what you should check. If you don't read a topic, it's okay. But you read it wrongly, then it is big worry. Why? First you should undo what you read wrongly. That is, unlearning is a very difficult. Learning is easy. Unlearning is very difficult. You should unlearn what you learned and then relearn what is the correct thing. So if it has to be debited but wrongly credited, to reverse that wrong credit, you should debit once. To record the correct debit, you should debit once again. You get it? So in this case, credit purchase means purchase account will be debited and Paul account should be credited. We have not credited Paul account. Simple, credit. But you wrote it as sale, meaning you wrongly debited Paul account. So to reverse that wrong debit, we should credit once. To record that right credit, we'll do it once again. So in simple, what I'm trying to tell is, if they've done the opposite, then you should do the double. Got it? So in this case, entry is purchase account debit, sales account debit to Paul, double the amount, 6,000 to Paul. But this is rectification at stage 3. Can we use purchase account, sales account? We cannot use purchase account, sales account. So we'll replace purchase and sale with. Very good. So we'll be writing P&L adjustment account to Paul. Purchase also is replaced by P&L adjustment. Sales also is replaced by P&L adjustment. So straight away we'll write P&L adjustment to Paul, 6,000, 6,000. In class when we write purchase account debit, sales account debit to Paul, and then eliminate those two separately. But we should write totally one short, one simple entry in the exam. Got this? Now are we done with all the errors? Yeah. Now P&L adjustment account is there, no? Wherever you used. This is always closed by transfer to capital. This is always closed by transfer to. Now we will do one more thing. You will close suspense account also and then transfer to capital, which you don't usually do in other problems. Usually you only transfer P&L adjustment to capital. Do you even transfer suspense to capital? No. Why? Suspense would have been already there in the trial balance. Now when you do debit credit, it will get closed. In this question, trial balance mein suspense is not there. Why? You transferred by mistake to P&L. So now whatever suspense you created by debiting and crediting in rectification entries, this is closed by transfer to P&L. Sorry, capital or P&L. Either ways is fine. So what you should do is just go on checking what and where and all is there. P&L adjustment, debit 8,000, credit 2,500. Debit 8, credit 2.5. 8 minus 2.5. 5,500 debit. 5,500 debit again plus 450. 5,950 plus 1,800. No one has calculator? Plus 6,000. 13,750. That is transfer to capital account. Daisy's capital to P&L 13,750. Same thing you should do with suspense also. What do we have here? Suspense credit 8,000, credit 450. 8,450, 8,450 transfer to capital. Transfer to, you get this? So considering that difference was posted to suspense. If they would not have given this statement saying that trial balance of the last year wrote off the difference, if they would not have given that, we would not have transferred it to capital. We would have not passed this entry. Our trial balance would have had 8,450 credit. Our trial balance would have had 8,450 credit in suspense account. The moment we debit here, suspense will become 0. You get it? Yes or no? Very good. Fine. So going forward, I told you this one doesn't have an adjustment on depreciation. Question can become interesting. Now, come to this adjustment. What is this adjustment that we have? We were talking about machinery. Repairs to machinery amounted to rupees. Repairs to machinery was wrongly debited to machinery account 1,800. If in case the end of the question they give one more line, depreciation is to be charged at 10%. You know what would happen in this case? Now, depreciation if it is 10,000, on that you charge 10% depreciation. Correct? No? Machinery if it is 10,000, on that you charge 10% depreciation 1,800. If in case there is repair expenditure incurred on machine, it should have gone to P&L, but you wrongly added it to the cost of the machine. So machinery is no more 10. Machinery has become 11,800. So you might have charged depreciation on, which is wrong. Why? That is not capital expense. So depreciation is wrongly charged. You should reverse it. You might have to pass machinery to depreciation as an entry, if that is there. Similar one such question is there in your ICI material. Please do go through it after today's class. Find a question which has rectification of errors at stage 3 with depreciation mentioned in it. Get that? I'll tell you, that's a girl's name. Roy problem. I think there's a problem by name Roy, I guess. Roy problem has depreciation adjustment. ICI material. Don't have to look into it now, but that's the one. Okay. Then we have another exam question. This is November 18. Have a look. These following mistakes were located in the books for its, I'll give you break around 2:05 to 10. Once we finish rectification, I'll give you lunch break. So till then, please concentrate. Yeah. And just in case by mistake you are distracted, you don't understand something, or something goes over your head at any point, no, don't distract your neighbor. They might be your best friend. You don't understand. Don't do that, okay? You don't understand, it's okay. Don't look at your neighbor. Don't do that, okay? So by this, you are disturbing your focus and concentration, and also you are affecting your neighbors. You get that? Next 18 minutes are very crucial. Why? When you are hungry, no, brain works crazily. Lion is more scary when it is hungry. You know? Like that only. You are all hungry lions now. Come on. Concentrate. We'll take a break at 2 to 5. We'll finish 2 more questions on rectification. Please stop talking all that. Stop it. I want silence. Start reading. The following mistakes were located in the books of a concern after its books were closed. Means trial balance is over. This is not stage 1. This is definitely very good. Was opened in order to get the trial balance agreed. Suspense account is opened. We don't have to write that last suspense to capital entry. We don't have to pass. Good job they've done. You will appreciate this question because this has been done after that previous question. Okay. Suspense account is opened. Now read the last line before you see the errors. Find out the nature and amount of suspense and pass entries, including narration, for the rectification of the above errors in the so this rectification is happening in stage 3. Final accounts are over. Why? Subsequent year. Correct or not? Subsequent year means next year. So again, after we decide upon the rectification entry, we'll check if it involves a nominal account. If it involves a nominal account, what do we replace it with? P&L adjustment. Shall we do that? Come on, read the first one. Sales day book was overcast by rupees. Sales day book was overcast means increased. So what should we do? Sales has to be decreased. Sales increase by crediting, decrease by debiting. In order to decrease our sales, what should we do? Debit sales. Have they spoken anything about debtors? It is one-sided error. So entry is sales account debit to. Sales account cannot be used in rectification at stage 3. We'll replace sales with. So entry is P&L adjustment to. Fantastic. Amount is 1000. Do we have to do double the amount? No. P&L adjustment to suspense 1000. Yay. Do you feel like you're solving it? Great. Then a sale of rupees 5000 to X was wrongly debited to Y. What is the correct entry? X account debit to sales. X account debit to. They have not debited X. They have wrongly debited Y. Why, sir? Y. Now, why, sir? Like Y has been debited, not WHY. Why? Why? Because they told don't talk about X, sir. Please. So what have they done? So correct entry is X account debit to sales, but they have wrongly written Y to sales. So X was supposed to be debited. Has it been debited? We'll debit now. Y has been wrongly debited. So what do we do? Credit. Let me repeat. X has to be debited, not debited. So we'll debit X. Y has been wrongly debited. So credit. Journal entry is X account debit to Y. But this is stage 3. Stage 3. So what? Stage 3 adre no. X account debit to Y account will be entry. Why? X and Y are not nominal accounts. X and Y are both personal accounts. Yes, sir. X is very personal. Yes, it is personal. And don't ask why. Yeah. Let's go. The third one. General expenses. General expenses. How much? 180. Was posted in general ledger as 810. Oh God, this is a very tricky one. So what do you mean by general ledger? So whenever the accounts are maintained on manual basis, whenever the accounts are maintained on, we do some control system called as self-balancing ledgers, because manual accounting you do all the ledgers. Ledgers don't tally at the end. Sorry, trial balance doesn't tally at the end. Where will you go? You should go to Lord Venkateshwara in Tirupati only. See, you need to redo all the journal entries, all the ledger balances. It's almost like doing entire accounting again. Manual accounting, may if the trial balance doesn't tally, it is hell. It is hell. You cannot find out the errors so easily. It's very difficult. You need to go through entire entries. So we have a control system called as self-balancing ledger. This will help us identify the errors easily as to where is the error. So what we do is we categorize into 3 categories. One is debtors ledger adjustment or sales ledger adjustment. Second one is creditors ledger adjustment or purchase ledger adjustment. Last one is general ledger. So all the items relating to debtors or sales will come in debtors ledger adjustment. All the ledgers affecting to purchase will come in purchase or creditors ledger. Anything other than purchase and sales is general ledger. Anything other than purchase or sales is. Here in this error, when they say general expenses was posted in the general ledger, what do you mean by general ledger here? Error is where? Error is in expense account or is it in the cash account? Error is in the expense account or cash account? Okay. How many of you say error is in the expense account? Show of hands. Sir, energy ne illa sa. Assume that I am offering food. Yarige biscuit beku. Now assume that is the question and then raise it. How many of you say the error is in general expense? Error is in general expense account. Very good. How many of you say the error is in cash account? Tell me what is the rectification. I'll teach you both ways and then we'll see the answer and I'll tell why is it so. Yeah. If the error, let's say, as you told, error is in general expense account. Where is the error? What is the correct amount of expense? 180. What have they recorded? This you understood, no? Correct amount is 180, wrongly recorded as 180 is recorded as 810. It has been increased. It has been by how much? 810 minus 180. 630 rupees is the extent to which expense is increased. 630 rupees is the extent to which expense is increased. You should decrease the expense. So what do we do? Credit the expense, debit the suspense. Entry will be suspense account debit to expense. That general expense. That general expense will be replaced with P&L adjustment. Entry is suspense account debit to. In fact, that itself is the correct entry. It is not the error in cash. I told you, if it is purchase related, they will call it PLA or creditors ledger adjustment. If it is sales related, they will tell debtors ledger adjustment or sales ledger adjustment. General ledger means every other account other than the debtors and creditors, other than cash. Cash will not be a problem at all. You get that? So whenever they use the word general ledger, it means expense income account. Expense account or income account. So debtors ledger, creditors ledger, general ledger. General ledger is expense and income. So in short, expense is 180. It is wrongly recorded at 810. 630 rupees, you increase the expense. What do? Decrease the expense by 630. So expense will be credited, suspense will be debited. And expense is replaced with P&L adjustment, because of which the entry is suspense account debit to P&L adjustment. Shall we go to next one? Okay, what do we have after that? Bills receivable of rupees 1550. That's an asset. Correct or not? Was passed through bills payable book. ಎಲ್ಲ ಹಿಂಗೆ ತಪ್ಪು ಮಾಡ್ತಾರೆ. The bill was given by P. When P gave us bill, what is the entry? P bills receivable account debit to P. What have we done? We wrongly recorded in bills payable. Bills payable is a liability. It is wrongly recorded as liability. It should have been recorded as asset. So bills receivable account is not recorded. So we should write it to bills receivable account. But it is wrongly recorded to bills payable account. Bills payable account is wrongly credited. Yes or no? So we should debit bills payable. It is bills receivable should have been debited but not debited. We'll again debit bills receivable. So the entry is bills receivable account debit, bills payable account debit. Should I be crediting or debiting P? No, should I be? If you think that there is an error in P account, we should write it for double the amount actually. If we write it, we should write it for but if they have not mentioned that there is an error, there would not be an error, then we should not involve P. Now were you able to understand that if P account is involved here, it will be for double the amount? Next. Hey, should I be changing bills payable, bills receivable with P&L adjustment? Why not? Why not? It is a representative personal account. Both bills payable as well as bills receivables are. It is not nominal account. We should not change it with P&L adjustment. You get that? So it is not bills payable. Is it bills payable or bills receivable? Is it bills payable or bills receivable? Bills receivable. It is. Have you recorded in bills receivable book? When you have not recorded in bills receivable book, it would not have gone to bills receivable account. So we will write now recorded in bills receivable account debit. It is wrongly recorded in bills payable book, because of which it would have wrongly gone to bills payable account. Liability record ಆಗ್ಬಿಟ್ಟಿದೆ. So what do? We debit. So bills receivable account debit, bills payable account debit, and need not replace it with P&L adjustment. Credit will be given to a P account for double the amount. 1550 plus 1550, 3100. One question that you might have here is, sir, how do we get to know whether to write 2P there or 2 suspense there? Very simple. Original entry itself is wrong. First we write it in subsidiary book. From there it will go to ledger. First you write it in subsidiary book. From there it will go to ledger. When you write in sales book, you write him as debtor. When you write in purchase book, you write him as creditor. You should have written in bills receivable book so that you would have credited P. You wrote in bills payable book. So by mistake you would have debited Mr. P. Original entry itself is wrong. So original entry in the ledger of P also would be incorrect. So we have corrected this way. If it was correct in P account, they should have given it was correctly. However, it was correctly recorded in Mr. P account. Would be given to us. Got that? Shall we read the next one? Legal expense of rupees 1190. Legal or illegal? Expense is expense only. 1190 paid to Mrs. Neetu. Sir, who's Neetu? That why do you want? It is expense, no? Yeah, debited to her personal account. You gave her legal expense for drafting some documents, filing some documents or something. Entry should have been legal expense to cash. Am I right? What is the entry? What did you write? Mrs. Neetu to cash. Yeah, you have debited to personal account. Personal account means Neetu. When you write Mrs. Neetu to cash, you know what will happen? That personal account will get balanced and come in balance sheet. It means that you have given her money and she should give her back to you. She should give it back to you. Correct or not? Did we give it as a favor to her? No. We gave her money because we've taken legal services from her. So it's our expense. Correct entry is legal expense to cash. But we've wrongly written Mrs. Neetu to cash. Legal expense account should have been debited. Have we debited? Debit now. Mrs. Neetu account has been wrongly. What do we do? Entry will be legal expense to Neetu. Legal expense to, when you write legal expense account debit to Neetu account, that is a rectification entry at stage 1 or stage 2. But this is stage 3. Can we write legal expense account debit? Oh no. It should be replaced with? So entry will be P&L adjustment to Neetu, 1190. Let's go to next one. Cash received from Ram was debited to fantastic. ತುಂಬಾ ಚೆನ್ನಾಗಿದೆ, ಮಜಾ ಬರುತ್ತೆ. So what is the correct entry? Cash to Ram. Cash to cash account should have been debited. But what have they debited? Oh God. Do you think they wrongly debited Shyam account in place of cash? Cash should have been correctly debited. Instead of writing Ram, they wrote Shyam. Sir, but Ram account is credit. They've debited Shyam. Exactly. That is a mistake that they've done. Sir, ತಪ್ಪು ಮಾಡಿದ್ದಾರೆ. That's what even I'm telling. That's what even they are telling. We should have credited Ram. Correct? Have we credited Ram? We'll credit Ram. They've wrongly debited Shyam. Should they have debited Shyam? We will credit Shyam. Sir, credit Ram, credit Shyam, debit. And suspense will be double the amount. 2000 ಅಂತಿರಲಿಲ್ಲ ಸದ್ಯಕ್ಕೆ. It will be double the amount. It will be, I'll tell you the correct entry, wrong entry if you want. The correct entry is cash to Ram. Wrong entry is Shyam account debit, cash account debit. Yes, they have written two debits without any credit. So Ram account was supposed to be credited, not credited. We'll credit now. Shyam account is wrongly debited. We will credit now. So suspense account debit to Ram, to Shyam, 3000. Suspense debit 1500, Ram and Shyam credit. This is the entry. Done. Let's go to next one. While carrying forward the total of one page of purchase book to the next, the amount of 1235 was written as correct purchase. This page total, they should write in next page on the top. That also they've done mistake. Yeah, what is the correct amount? 1235. What have they written? Have they increased the purchase balance or decreased? By how much? 1325 minus 1235. 90 rupees increased. What has been increased by 90? Purchases. So what should we do? Decrease purchase by 90. Purchase debit increase, credit decrease. So we should credit purchase by 90. Debit will be suspense. But this is rectification at stage 3. Because this is rectification at stage 3, can we use purchase account? We will be replacing purchase account with P&L adjustment. Get that? So the rectification entry will be suspense account debit to P&L adjustment account. What's the amount? 90 and 90. Got it? Great. And this P&L adjustment account throughout wherever is there, it should be closed by transfer to capital. That entry is not there in the solution. They have forgotten to given in suggested answers. This is a copy of the suggested answer, but you would have to still pass that entry. What should you write? We should close our P&L adjustment account by transfer to capital. Don't forget that. This is done constantly whenever the rectification is at stage. Very good. So these are the 3 examination questions that we did. Let's see next. Next is RTP question. RTP question. That's it. So except for the June 22 attempt and the December 21 attempt, I've done all the past exam questions on rectification. Yeah. See, have a look. Rectification. Did we see the weightage? How it's come? We did not see. This is the weightage. I ignored the first 3 attempts. I didn't discuss the first 3 attempts. And then out of this 10, 5, 10, no, 10, 5, 10, 5, no, we've done 3 questions. We did 3 questions now in the class. 2 we didn't do. Yeah, we'll do 1 tomorrow when we do the entire paper analysis. You get that? Yes or no? So next we'll go ahead and then start with the topic of, should we take a lunch break here? But after the battery change, I've taken only 45 minutes ka session. Okay, that's fine. We need to listen to our stomach also at times. So it is 2 o'clock on the clock. I'll give you 45 minutes lunch break. See you all back at 2:45 dot. Please don't take your own sweet time. Come back because I'm going to start at 2:45 dot. And you will be sitting at the same places where you're sitting. And then don't come back to fight for the places. Hope you'll have some food and then come back. How many of you will come back? Great. Post break we'll be doing BRS, valuation of inventories, depreciation. Chalo, come back soon guys. Hello guys. Good afternoon. Welcome back to CA Foundation face-to-face marathon revision. So this is our post break session on day 1. So pre-break we've discussed chapter 1 and chapter 2. And in chapter 2 we discussed both the entire accounting process with before rectification and also we discussed the rectification part. And pre-break I had shared the link of chapter 1 theoretical framework to you all. I hope all of you have taken that true or false. Yep. And here it is, the theoretical framework ke baad accounting process other than rectification parts QR code. It's right now displayed on your screen. You guys can take the picture of it and save it if you can take up the what to say TOEFL later. I'll also show the rectification of errors scanner code with you all, so that you can take it and take the true or false post break. I'm going to say post class. Second chapter only, but this is rectification of errors different. Previous one is accounting process. It's showing? You didn't see, that was there throughout the break. This is accounting process, and this is rectification of errors. Great. Come on, let's now get started with the topic of bank reconciliation statement. As we start with the topic of bank reconciliation statement, I would expect a little bit of silence. Whoever is talking, please do ensure that you don't talk. It is not that I can't point out, but I don't want to. There are better things to be done. So this is the past examination pattern of the topic of bank reconciliation statement. Consistently it's come for 10 marks, and people were expecting the 10 mark saga to continue, but it so happened in the midst of COVID that additional attempt that was given for people who opted out, there was only a 4 marker question, and then following it up again there was only 5 marker. But again we started getting 10 marker questions from December 21. But in the previous attempt, the June 22 attempt, there was a very simple easy 5 marks question. The attempt before that there was a 10 marker, but that was BRS with amended cash book. There was a BRS and it needed amended cash book also after BRS. Such kind of a question was there in June 2022. In December 21 it is 10 marker. And the usual trend goes like question number 2, the last 2 attempts. I hope it might carry forward. Like, you know, if there is a question on BRS, it will be part of your question number 2. No. Get that? Chalo, let's start with the topic of BRS, bank reconciliation statement. To start with, I'll make an upfront statement. I want you all to tell me if it's true or not. Bank reconciliation statement is prepared with an objective of determining balance as per passbook. The answer is false. The objective is not to determine balance as per passbook or not to determine balance as per cash book. This is a chapter which is based on reconciliation. It is not finding out one other item. You get that? Practically what we do in this chapter is quite different from what kind of questions that you get in the examination. So in the exam what happens is cash book balance is a starting point, you find passbook balance, or passbook balance is a starting point, you find cash book balance. These are the kind of questions that you solve in the exam or in your exam preparation. Practically that's not what we do in this chapter. So usual thing what will happen is the cash book balance will be available to us because that's what we prepare. Passbook balance will be available to us. Why? If we just approach the bank, they'll give the PDF of it. Long ago, they used to print it in a book and then give. So passbook balance, cash book balance, transactions in cash book as well as transactions in passbook is completely available with us. Completely available with us. What we need to do is we need to reconcile. What should we be doing? When we say reconcile, what we need to be doing is we need to find the reason for difference. Obviously, the balance as per cash book and passbook might not match. There are several reasons why it will not match. We need to identify the reason as to why is it not matching. We need to identify the reason why it is not matching. That reason can be because of our error or it need not be because of our error. The entire objective of BRS and then reconciliation is identifying if there are any errors. And if in case there are errors, we should rectify those errors. If in case there are errors, we should. Very good. So that's the point. So bank reconciliation statement. What is it? It is a statement. What is bank reconciliation statement? Look at the word statement. It's black. It will become green, meaning it's a statement. That's the answer. So when I say it's a statement, what I mean is it's a statement and not an account. You say, oh God, बहुत बढ़िया बात बोल दिया sir आपने. Statement and not account. Yeah. You should think little wisely and ask, if it is just a statement, then why do we prepare it as a part of our paper 1 principles and practice of accounting? It is statement, no? and the name of the subject is not statements. Subject name is, why do we read it? So the next question is, why is BRS prepared? The answer is reconciliation. What do you mean when you say or when you use the word to reconcile? What is reconcile? It is to find the reason for difference between two items. It is to find the reason. There is difference. Why is there a difference? Why is there a difference? You're trying to find. Now, after you write your exam, you have answers, you have marks. Definitely, if you have not got 100, you want to know why you didn't get 100. So you keep your answer sheet. You keep the suggested answers issued by ICI. You compare your answer sheet with ICI suggested answer and find differences. Oh, this is mistake in ICI suggested answer. Oh, this is mistake in my book. You compare like that. Usually it's the second, but in terms of cash book and passbook, you can definitely go down to identify some errors in the passbook also. Remotely possible, but possible. You get it? So difference. Now when we use the word difference here, what do we mean? What are the reasons for differences? That's the major discussion. The reasons for difference is between, the items between which we are finding the difference is cash book and passbook. When we say cash book, it is the book that we prepare. Though we use the word cash book, we are referring to bank column of cash book. What are we referring to? And when we say passbook, it is an account of all our transaction that we've done with the bank as per the banker's perspective. This is from the perspective of the bank. Great. What are the reasons for difference? The first reason for difference can be this way. You have issued checks to people. What have you done? Doing business. You don't want to do cash transactions anymore. So you believe in cashless transactions or cashless economy. Modi uncle tells no. Yeah, so you gave check and then gave it to the person from whom you purchased goods. The moment you gave the check to him, you wrote the entry credit hours account debit to cash. You wrote the entry as cash paid. In your cash account, the balance has reduced, but such an entry has not reflected in the passbook because the person to whom you gave the check has not deposited such check with the banker. Is that a possibility? Definitely yes. A check issued but not deposited with the bank, or checks issued and deposited, but due to some reason it's not cleared. That's the reason for difference. The first reason. And the second reason is similar to the fact that you have given check to somebody, someone else also could have given check to you. Someone else has issued you a check. You have taken that check. The moment you receive such check, you will write the entry, no? Bank account debit to the person who's given the check. Bank account debit to the person whoever has given the check. You write their name. So when you write such entry, your bank balance as per cash book has instantly increased. However, your bank balance as per passbook would not instantly increase. Why? That check has to go to bank. Bank has to clear the check. Only then your bank balance as per passbook will increase. So check has been deposited, received but not deposited, or received and deposited but it has not yet been cleared. This is the reason for another. This is another reason for difference. Or the third point, what can happen is the person with whom you're doing business, no, you know him very well. So because of which is not offering you checks anymore. He straight away deposits the money into your bank account without giving you check. He didn't give check which you should deposit. Straight away when your customer deposits the money into your bank account, your bank balance as per passbook has automatically increased and you are not even aware of the same. When you're not even aware, you've definitely not made any entry in your cash book. So the bank balance as per passbook has increased because of the direct deposit, but the entry is not made in the cash book. This is the third reason for difference. And the next reason for difference can be, I told you are a busy man now, you're doing a lot of business. So you asked your customers to directly deposit money into your bank account. Similarly, whenever you have to make any payments like trade subscriptions or any regular payments like internet bill, electricity bill, water bill, or any other payments, insurance premium, not personal insurance, business insurance, insurance for goods, or any other periodic payments what needs to be paid at regular intervals, you might not pay it every time by your own will. You might give an instruction to bank saying, oh boss, make this payment every month. My rent, every month I would have to pay rent. I might forget. So you straight away, 5th of every month, deduct my rent, pay it to the bank. So you can do you can give such an instruction, because of which banker will automatically make payment. When the banker makes such payment, again such a payment will reduce your bank balance as per passbook. However, you might not have recorded the entry in your cash book. That's the next reason for difference. What is it? Payments made by the banker on standing instructions. As you gave instruction to the banker to make payments, similarly you can give instruction to the banker to collect money on your behalf, because of which banker has already collected money on your behalf. For instance, dividend or any interest which the banker has automatically collected, your bank balance as per cash book has increased, passbook has increased, but you are not aware of it and you have not entered in cash book. This is another reason why there can be difference between passbook and cash book. And the next of the differences are something like very simple. Because banker is offering all of these services, banker would charge you some expenses which is recorded in passbook but you have not entered in cash book. Or similarly, because you have money with the bank, banker has given you some interest because of which your passbook balance has increased but the cash book balance has not increased, is also a reason for difference. And we being human beings, banker being human beings, we or bank, either of us can do error. And whether we do error or the banker does error, one of them has done the error and the other has not recorded such an error. Balance as per cash book and passbook might not match again. You get it? So these are the reasons for differences. And as I told you previously, the objective of this chapter is to identify the differences and to reconcile them. Reconcile means what? The objective totally means that we will see these reasons for difference. Are any of them errors? Are any of them because of our errors? If any of the difference is because of our error, we should rectify it. Now two people are fighting. You go to them and then ask, hi friends, why are you fighting? ಅವರಿಬ್ರು ಫೈಟ್ ಮಾಡಲ್ಲ, they will hit you first. ನೀನು ಯಾರ ಮಧ್ಯೆ but usually we ask that when someone asks, why do we ask? We ask to tell as to why are they fighting. You listen to the entire story, both the versions, then you tell, hey, this is your mistake, you should say sorry to him. This is your mistake, you should say sorry to him. So that the errors, if at all there is any, it should be rectified. Same is the case with here also. We'll compare our cash book balance with passbook balance. Balance doesn't match. That is because the transactions are not same. We will see transaction wise. If any transactions are there in passbook but not there in cash book, we will see whose mistake is it. If it is mistake in our cash book, what will we do? We will rectify. If it is mistake in the passbook, what will we do? Go to bank, push that lady who's playing solitaire aside. Ma'am, said go here, Nimsha. And then you do all the rectification in the banks. Can you do that? No, you can't do that. You can't do that. What will you do? Maximum you can do is you can write one letter to bank. Hi ma'am, you wrongly given credit to me, 10,000 rupees playing solitaire game. Please after lunch break correct this error. So max you can do is write a letter to them which they'll rectify. Do you get this? So if there is an error in passbook, we can't rectify. If there is an error in passbook, if there is an error in cash book, we have to rectify. We should do something about the same. Do you get it? So we'll identify all the errors and then rectify them in our cash book. When is this BRS prepared? How often? How often? This is at management discretion. There is no condition that you should do it monthly, you should do it weekly, or you should do it yearly. Depends upon the size of the organization. Very big organization, hundreds of bank transactions every day, then do it daily. Do it. Why? If you don't do it on daily basis, at the end of 1 month you'll have so many transactions to reconcile. Highly impossible. So do it daily. If the organization is not that big, hundreds of transactions are not there every day, hundreds of transactions per week, then do it weekly. No sir, not that big also, ಇನ್ನೊಂದು ಸ್ವಲ್ಪ ಚಿಕ್ಕದು, then do it monthly. ಅಲ್ಲ ಸರ್ ಇನ್ನ ಚಿಕ್ಕದು, do it annually. Sir inna chikkadu, then don't tell me. So minimum you need to do it annually. So when is it should be prepared at regular intervals, but minimum period of time at which you should prepare BRS is annually. Why? See, annually, no matter how small or how big the organization is, you would prepare financial statements. No matter how big or small the organization is, you would prepare financial statements. You would prepare balance sheet. In that balance sheet, you would write bank balance. If you don't prepare BRS and you write your balance as per cash book as bank balance in balance sheet, there is a possibility that such a bank balance in your cash book might be wrong. Might be wrong. You didn't even give a small ray of thought as to, is it wrong? Is there a possibility that I might have done wrong? Yeah, you're like, Madid yaru. You should check, no? Correct or not? Yeah. Who's the father of the nation? Mahatma Gandhi. We judge him only. We'll say Mahatma Gandhi was only wrong. Pakistan happened because of Mahatma Gandhi. Hey, who told you? As if you were there then. You question the father of nation only. Question yourself also sometimes. As to the cash book that you might have prepared might be little wrong. It might have some errors. Compare it with passbook. If there are no errors, very good. Shabash. If there are errors, correct it. And then corrected balance should be posted to balance sheet. Do you get it? So it is mandatory to prepare BRS at the end of each period. Clear or not? Yes. Now tell me, which balance should we show in balance sheet? Balance as per cash book or balance as per passbook? Eradu alla. This cash book can be wrong. You should make amendments to this balance as per cash book. You should make amendments to this balance as per cash book. And then we'll arrive at balance as per amended cash book. Such an amended cash book balance should be shown in balance sheet. What do you mean by amended cash book? We compare no cash book with passbook. Then we'll arrive at differences. Such differences should be categorized into two major classifications. What are the classifications? One, timing difference. Two, non-timing difference. Timing difference means there is a difference between cash book and passbook, but this is because of time. This is because of time. Time ಇದೆ ಅಲ್ವಾ ಅದಕ್ಕೋಸ್ಕರ difference. After some time, no, the difference will not be there. After some time, no, the difference will. How simple? A check has been issued, but not cleared. Okay, give some time. Give time, some time. Check will be cleared. You issued check today. Immediately will it clear? No. Cash book mein you wrote the entry today. Passbook mein it will come tomorrow or day after tomorrow. You give time till tomorrow or day after tomorrow, it will automatically get cleared. Should you do something about it? Sit and then chant Gayatri Mantra 10 times? No, you don't have to. It will work. Check will get cleared. So it is timing difference. It will get cleared by time only. Today there is difference. After some time it will no more be a difference. However, there is bank charges deducted in passbook. You have not entered in cash book. Timing difference, non-timing difference. Non-timing. They have recorded in passbook. You should record in cash book. If you don't record in cash book, it is difference. Next year also it will be difference. The year after that also it will be difference. Automatically bank charges won't come to your cash book. You should make the entry. Till the time you make the entry, the difference will continue to exist. So this is error of omission actually. This is error of only way out of this error or only way to reduce this difference or remove this difference is by rectification. No other option. No other option. You have to do rectification. So non-timing differences are the differences which will arise other than because of time. Timing differences are the differences which will arise because of time. We should correct our cash book balance for what differences? Non-timing differences. So we'll take balance as per cash book, and to this we make changes for our non-timing differences, and then we'll arrive at balance as per amended cash book. Such a balance as per amended cash book will go to balance sheet. Where would it go? What are timing differences? Please read. What are non-timing differences? Read this. Cunning me. It's actually becoming a little torture with mic. That one. Okay, great. So what is non-timing difference? It is the difference between balance as per cash book and passbook arising because of a reason other than time. Very good. In other words, no, it is errors in cash book. We need to rectify the cash book for errors in cash book. So we'll discuss all the differences and you will go on telling me whether it is timing or non-timing. Will you tell? I'll show the difference. Come on, the first one. Checks issued but not deposited. Or checks deposited but not cleared. Why? You give some time and the check will get cleared. You don't have to do anything to get the check cleared. So this is timing difference. Then we have the next one. Checks deposited but not cleared. This is again timing difference. Timing difference is green. Non-timing difference is red. Green means there is difference, but still go on. ಹೋಗ್ತಾ ಇರಿ. But if it is red color, stop, rectify, and then go forward. You get that? Next one. Direct deposit by customers into bank account. Timing, non-timing? Non-timing. Why? It's an error. Customers have directly deposited money which you have recorded in passbook, but you have not recorded it in cash book. You should record in cash book. Very good. Then what do you have after that? Next one. Payments recorded in bank account because of standing instructions. This is a non-timing difference. You have to rectify the same. Very good. So non-timing difference. Red flag. Then next one. Receipts collected by the banker and recorded in the bank passbook only. Not recorded in cash book. What error? Non-timing difference. It's an error. Error of omission. You have to record the same. Then what do we have after that? Errors in bank charges recorded in passbook only. Timing, non-timing? Non-timing difference. We need to record it in our cash book. How about interest recorded in passbook only? Non-timing difference. Again, we have to enter it in our cash book and only then go forward. There are errors in cash book Not debit difference. If there are errors, we need to rectify this. Red flag. What if there is errors in passbook? Huh? Okay, why error? But not in our books. Error is in passbook. Who will correct it? Banker will correct it. You cannot go to the banker and then say, "Can I do double entry into your accounting package?" Oditare. You get that? You can't do that. Only they'll do it after lunch break. Yeah. Then what do we have after that? Now let's quickly see as to how to solve problems on BRS. Did I show you how it is come in the past examination? Past few exams? Did I show? Oh, we already saw. So the maximum difficulty level that you can expect in case of BRS is a question which will involve BRS as well as amended cash book. Sometimes the language can become super tricky with bill dishonored and then some checks deposited they'll give a different amount, checks cleared they'll give a different amount. They can play little with the language, but it can't become way too complex. I think we've already done one master question on this topic in detail. We've done. You can watch that at a later stage. It's on the YouTube. Same Issues Academy's YouTube channel. But for now, we'll do some exam related questions from this chapter. Shall we? Okay. And you people do this presentation for this chapter's question in the form of debit credit. I would say you cannot do that. Don't try to present the answer to this chapter's questions in debit credit format. You would have to write it only in the plus and minus format. And one tip that I can give to you people on this chapter is that whenever you do question, you start with balance as per cash book or balance as per passbook. 99% of the times you start with balance as per cash book only. Passbook balance is not what you start with. You start with cash book balance to arrive at passbook balance. Except a very rare circumstance where they give us passbook balance and not give cash book. However, if they have given us the question on amended cash book, remember amended cash book has to start with balance as per cash book. If they are given cash book, we'll start with them. If not, start with passbook. Identify cash book balance. Then find your amended cash book balance. Get this? Yep. And there will be few add items, there will be few less items. Don't try to write all add items first, then I'll write less items. If you try to do that bifurcation, no, you'll never be able to decide how many plus items are there, how many minus items are there. You'll not be able to do it. You'll leave some 5 lines, there might be only one adjustment, 4 lines are pasted. Or you might leave 5 lines, adjustments are 7. Then you will write on the line, one above the line, one below the line, one in the line. Like 2 lines, you will write 3 adjustments. Don't do all that. Go by the merit of the adjustment. A, B, C, D, E, F are their adjustments. Right? A, B, C, D. A is add. Right? B is minus. Right? Minus. C is add. Right? Plus. So you don't have to maintain that bifurcation. Get what I'm trying to tell? You don't have to write all the plus items one side, minus. Who told you? Sir, but suggested answer usually, yeah, it is easier for them. For them, no, if the line is extra, they'll remove. If line is shorter, they'll insert. It is easy because they type. You write. You can't even delete. You have to scratch. Do you get that? Yeah. So you don't have to bifurcate plus items, minus items separately. Write them all together. Never a problem. Yeah. So these are the past exam questions. Couple of RTP, MTP questions are also there, but we'll focus mainly on the exam question. This is again one more RTP question. ABC. So Sri Hari question. This is also RTP. Then one more Mr. Hari question. RTP. Neil question is there. This looks like an exam one. No, this is also RTP, MTP. This is exam paper. November 18. November 18. Prepare bank reconciliation statement from the following particulars as on 31st of March 2018. This is the question. Shall we quickly solve this? Question number 79 in the PDF that will be shared to you. Whoever is making some small notes, you can just note as to what question was. Question number 79 was. Like if you are making, I'm not asking you to note down it. Come on, let us start reading. Prepare bank reconciliation statement from the following particulars as on 31st of March 18. So what do we have to start with? Debit balance as per bank column of cash book. Hey, remember, whenever we say debit balance, what we mean is positive balance. What we mean is, when we say credit balance, what we mean is negative balance or overdraft balance. Negative balance or overdraft balance is credit. Debit balance is positive. And in the past, in the past book, it's opposite. Credit balance is favorable balance or positive balance. Debit balance is negative balance or overdraft balance. Where in the past. So opposite of cash because the perspective is different. See, when you deposit 10,000 rupees in the bank, to you it is asset, it's a debit balance. To banker it is liability, it's a credit balance. Opposite, no, obviously. To me, if it's asset, to the other person it is liability. Yeah. To my sister, if I'm brother, to her I am sister. No? Correct ಅಲ್ವಾ ನೋಡಿ ನಿಮಗೆ ನಗ್ಸೋದಕ್ಕೆ ಐ ಶುಡ್ ಕಾಲ್ ಮೈ ಸೆಲ್ಫ್ ಎ ಸಿಸ್ಟರ್ ನಾವು yes actually I can become a sister yeah nurse also is called sister no? Sir if he is a man is called a brother who told you ಹೌದಾ they'll call brother what do they call huh? ward boy allapa you guys don't know the difference between compounder and nurse yeah the one who says straight out right tone and wait ಮಾಡಿ that is compounder one who puts the bandage and then cuts the what to say that bandage andavane so fine now everyone woke up now come on start reading 79th one we're starting with debit balance as per cash book this is a positive balance what balance is this very good this being positive balance this being positive balance let's keep our starting point in the mind as cash book there's no last line to this question so whatever we do itself is correct so we're starting with balance as per cash book we're trying to find the balance as per fantastic come on let's read the first adjustments check issued to creditors but not yet presented to the bank for payment so you have issued the check you have issued the check so we'll remember it this way okay this is cash book people do this and all I do know that people do this no? So this is fine but what is cash book what is passbook cash book passbook ಹಿಂಗೆ ಗೊತ್ತಾಗುತ್ತೆ ಕನ್ಫ್ಯೂಸ್ ಆಗ್ಬಿಟ್ರೆ ಹಿಂಗೆ ಇಟ್ಕೊಂಡ್ ಮಾಡಿದಾಗ get confused so we hold cash book like this see ಹಿಂಗೆ ಇಟ್ಕೊಂಡಾಗ ಕಾಣಿಸುತ್ತಲ್ಲ see this is C only no this can't be anything else see and passbook is like this P simple cash book very good so check has been issued am I right when you issue check where will you make the entry so your balance as per cash book will but your balance as per passbook has can you see the P in order to see the P either you'd have to P down or CR what's in your control C because we're starting with balance as per cash what do we do up meaning add what do we do sir what one second I'll get my pen ಕರೆಕ್ಟಾ ಫಸ್ಟ್ ಈ ಕಡೆ ಬರಿಬೇಕಾ so 3,60,000 plus got that let's go to the next adjustment so what do we have after that dividend received by the bank not yet entered in so who has collected the dividend on our behalf banker has collected dividend when the banker collects dividend banker will increase our balance as per passbook so balance as per passbook has but the balance as per cash book has can we see the P in order to see the P either you have to P down or where are we making changes what do we do shall I add again yes 2,50,000 also add I'll do one thing minus I'll write on the other side minus I'll write on left side plus I'll write on right side it will be easier come on come to the next adjustment interest credited by the bank so banker has given us interest when banker gives interest balance as per passbook will but the balance as per cash book has where are we making changes what do we do add this as well so come on 6,250 also yep what's after that next adjustment we have checks deposited into bank for collection but not collected by bank up to this date. You have deposited the checks with the banker. You deposited the checks with the banker. What has happened? Bank balance as per cash book has increased. Am I right? but the balance as per passbook has not increased. Why? Banker has not yet collected those checks. So cash book balance has increased, passbook has not. Where are we making changes? What do we do? Shall I write this as a minus item? Okay, first minus item. We have to celebrate this. Minus 7 lakh 70. Then bank charges not entered in cash. Bank charges have already reduced our balance as per passbook, but we have not entered in cash book. So cash book balance is not reduced. Passbook has gone down, cash book has not. Where are we making changes? What do we do? Minus. Shall I do it as a? Shall I write it as a minus item? What do we have after that? Checks deposited into bank was dishonored, but no intimation received. You have deposited one check into bank, because of which you have increased your cash book balance. Passbook balance has to increase, but has not increased. This same as checks deposited but not cleared. You say checks deposited but not cleared, no? There is a ray of hope that will get cleared later. But when it is dishonored, it means that it will never get cleared. It will never get cleared. So cash book balance has increased, passbook will never increase. To stay there only. So can you see the P? In order to see the P, either you have to see down or P up. Where are we making changes? What do we do? See down, minus. Shall I write here minus? Last item. Bank paid house tax on your behalf. Why? You gave a standing instruction to the banker to make the payment. Because of which, when the banker makes the payment, balance as per passbook has reduced, but the balance as per cash book has not reduced. The payment is made, passbook has reduced, cash book has not reduced. Can you see the P? In order to see the P, either you have to P up or C down. What's in your control? C. What do you do? C down. You're saying C down, but none of you are seeing down. Yeah? Come on everyone, take your calculator. 18 lakh 60 plus 3 lakh 60 plus 2 lakh 50 plus 6,250 minus 770 minus 1000 minus 1 lakh 60. 13 lakh 70,000. Come on, let's see the answer. 13 lakh 70,250. It's a very simple one. They've not asked us to do amended cash book. 79 Allah. 13 lakh 70,250 is the answer. This is one of the past. Is that the same balance that we got? Fantastic. Shall we do another exam question now? We'll see all the exam questions. If in case coverage of all the exam questions doesn't cover any specific topic, then you'll pick a separate question on the part. Great. But I would expect you people to be quiet. We have another exam question. This is from May 2018. Oh my god. Question looks pretty big. Yeah, the same question is there in your ICA material. Rani, 5678, 8675. Rani has two bank accounts. She deposited money in her other account, 8675. But banker has wrongly given credit 5678. Same question. Same question. The figures are also not different. Come on, let's solve this one. The bank passbook of the account 5678 of Mrs. Rani showed an overdraft of 33,575. Oh ho, there is overdraft of 33,575. Now listen. Usually you add some items and you deduct the other set of items. When you start with overdraft balance, what do? All the less items will become plus. All the plus items will become. Don't do that. Don't do that. Why are you doing that? See, your opening balance has become negative. So what you're doing is all the add items what you usually add. You think like this. Check is deposited, cash book increased, not cleared, passbook is not increased, changes in cash book we should deduct. But because this overdraft we will add. Why? Why is that extra last one line? Simple. Why is that extra last one line? Why are you changing it? Because it is overdraft. Don't let overdraft change all your add items to, and don't let overdraft change all your less items to add. Make the overdraft balance minus amount. Simple logic, no? Don't let the tail shake the entire dog. Let the dog shake the tail. Simple logic. Overdraft balance idya. Write that bank balance as minus. Write that one item. Just to avoid that one item writing as minus, you make all the plus items minus. Don't do that. So start with negative balance. So if you can write down, I'll just tell you minus plus you write. That will be more than sufficient. So what you would do is you start with minus 33,575. What do you start with? Your starting point is minus 33,575. And what are you start with? Balance as per passbook. Balance as per. So you're making changes where? Remember that you're making changes in passbook. ಕಾಣಿಸ್ತಾ ಇಲ್ಲ sir. Is it visible now? Our starting point is passbook balance minus 33,575. Gap ಜಾಸ್ತಿ ಆಯ್ತಾ? Is this fine? I'll go on writing here plus minus. Find the rest of the answer. ಆರಂಭಿಕಲಾಮಾ? Come on. Next one. A check of rupees 1080. On going through the passbook, they've given some difference. Read the last line once. Prepare bank reconciliation statement as on 31st of March 2018. ಅದನ್ನೇ ಮಾಡ್ತೀವಿ. You give passbook and cash book balance. I cannot do balance sheet. I'll obviously do PRS. Come on, let's read the first adjustment. A check of rupees 1080 credited in the passbook on 28th March 2018 being dishonored. Ooh. Okay, debited again in the passbook on 1st April. Listen here, listen. So did you deposit the check or did you issue the check in this case? You have deposited the check. You deposited the check. Cash book increased. It is credited in passbook. What is it done? What is mentioned? Credited in passbook. Meaning passbook balance also increased. All fine, all happy. Cash book increased, passbook also increased. Before you can start celebrating, the banker told this check is dishonored. When did you tell? 1st of April. 1st of, that is when? Next, because we are doing it as on 31st of March. Okay, great. There was no entry in the cash book about the dishonor of the check until 15th of April 2018. Okay, so when did you enter that? When did you enter it? After that, after 31st of March, 15th of April. Now tell me, should I add this or deduct this? Chocho. Nothing. Why not? It is take dishonored, recorded in passbook only. You might feel like, oh, they've given an adjustment, I should do plus or minus. If I don't do plus or minus, you're feeling FOMO. Fear of missing out. You don't, I got it. I initially didn't know what is FOMO or not. Yeah, because I have phobia. Fear of being included. So when people make plans and then include me in the plan, I get little tensed. Yeah, it's opposite of being FOMO. So we introverts feel it. You guys don't know. Leave it. So 1080 rupees a check has been deposited. So your cash book increased. Get that? Passbook has also increased initially. As on 31st of March, check has been deposited. Passbook balance is also increased. It's matching. After 31st of March, on 1st April, passbook balance decreased. And cash book balance decreased on 15th of April. So till then there is there is no entry in cash book. But as on 31st of March, both the balances are matching. Check is not dishonored. So we don't have to rectify this. We don't have to reconcile this. So you actually do nothing about that first step. We actually do nothing about that first step. Why? As on 31st of March. This is neither affecting cash book nor affecting pass. There is no difference. Both the balances are same to same. Same. Get that? Come on. Let's see the next adjustment. Shall we see the second adjustment? Bankers had credited her account with rupees 2,800 for interest collected by them on her behalf, but the same has been not entered in cash. Banker has collected interest because of which balance as per passbook has, but the entry is not made in the cash book. Cash book balance is not. Where are we making changes? What do we do? Shall we do minus now? Minus of how much? 1080. 2,800. Oh, sorry. ಬರಲ್ಲಪ್ಪ ಕನ್ಸಲ್ಲೆಲ್ಲ ಬರಲ್ಲ. Yes, classic ಮಾತ್ರ ಬರ್ತೀನಿ. Read the third one. Out of rupees 20,500 paid in by Mrs. Rani in cash and by check on 31st of March 2018, checks amounting to rupees 7,500 were collected on 7th April. Listen to me carefully. How much is the checks that you deposited? 20,500. Out of that, how much was collected after 31st of March? If 7,000 is collected after, that means that the balance is collected immediately. Correct or not? Yeah. So they told 7,000 collected after. So remaining is collected immediately. 20,500 is what you deposited. 13,500 is deposited and collected. Okay, 13,000 is deposited and collected. 7,500 is deposited but not collected. So now tell me, should the adjustment be for 20,500 or 13,000 or 7,000? Why no adjustment for 13,000? Sir, because 13,000 is not given in the question. 13,000. What if they are given in the question? Checks deposited 20,500, of which 13,000 is cleared before 31st. Still, your adjustment would be for the same. So we are worried about those checks which are deposited but not cleared. We are worried about only those checks which are deposited but not cleared. Those checks which are deposited uncleared, we are least bothered. We are least bothered. Why? They have appeared in passbook as well as cash book. We don't have to do anything about them. But this 7,500 worth checks, what have happened? They've been deposited in March, cleared in April. They appear in cash book in March, passbook in April. So cash book balance has increased in March, passbook balance has increased in April. As on 31st of March, cash book balance has increased, passbook balance has not increased. As on 31st of March, cash book balance has increased, passbook balance has. Can you see the P? In order to see the P, either you have to P up or what's in your control? P, passbook. In this question, we're starting with passbook. What do we do? Shall we add? How much do we add? 7. It is paid in by rupees. Okay, I'll tell you. It is not paid by Rani. It is paid in. Paid in means she takes the checks, she takes the cash to the bank and then say she will deposit into bank. Paid in as a word, no language means deposit. What does the word paid in mean? Deposit. She's paid into her bank account. She's not paid to somebody else. It's not checks issued. It's checks received and deposited. Oh, language. BCR. Got that? Tell me about the next one. BCR, no? Don't ask me full form. Yes. I know BC, business correspondence and reporting. Correct? See, I know BCR complete. I didn't know what is R, sir. I was thinking. Okay. Listen. Fourth one. Shall we discuss fourth one now? Out of the checks amounting to rupees 7,800 drawn by her. What do you mean by drawn? You take the checkbook, you take the pen and then draw your signature, draw the amount, draw the date. Sir, the writing. Writing is nothing but drawing. Yeah, signature is a locus of a point which moves such that your name is written in a manuscript which cannot be reiterated or copied by anybody else. Never read. What is a circle? Circle. What is a circle? It is a locus of a point which moves such that its distance from a fixed point is always constant. What is parabola? It's a locus of a point which moves such that its distance from a fixed point called focus and fixed line called directrix is always constant. Don't know? Yeah, I am a commerce student, sorry. People who did math, you don't know all this. So bad. Come back. So she has drawn a check. So this is checks issued. This checks. How much is the checks issued? 7,800. Very good. A check of rupees 2,500 was encashed on 3rd April. Meaning the person to whom you given check, no, that person took the check to the bank and collected the money on 3rd of April. So as on 31st of March, that one check is not encashed. They're talking about that one specific check and then saying that it is not encashed. Can I assume that the rest of the checks have been encashed? Okay, total is how much? 7,800. How much is not in cash? 3,000. 2,500. Deduct 5,000. What do we do with 5,000? So what is the check which is not in cash? 2,000. So we do adjustment for 2,000. 2,500 is checks issued, but not. 2,500 is checks issued, but not. Because the check is issued, balance as per passbook has not decreased. Balance as per cash book has decreased. The balance as per passbook has not decreased. When will it decrease? When the check is cleared. So cash book balance has decreased, passbook has not. Where are we making changes? What do we do? Minus. How much minus? Done. Shall we see the fifth one now? Banker seems to have given wrong credit of rupees 500 paid in by her only into account number 8765. She has two accounts. One is 5678, one is 8765. We are doing BRS for bank account 5678. We are doing BRS for account number 8765. If something happens, we don't care. We don't care. But here they have given that she has deposited money into her account 8765. So 8765 balance should increase. But banker has wrongly increased balance as per 5678 for which we are preparing PRS. So balance as per account 876 or 5678 has wrongly increased. But cash book has not changed. So is the passbook balance changed? Yes. Cash book balance has not. Can you see the P? No. Where are we making changes? Passbook. What do we do? Shall we deduct? How much do we deduct? 500. Separate ಆಗಿ ಮಾಡೋಣ. Don't club things. Get what I'm trying to tell? If you try to do, it will become wrong. So don't try to club things. Write them separate only. Don't write them together. Yeah. So what is the next item? A wrong debit in respect of check of rupees 300 against the account 8765. So you issued one check from your account 8765. Get that? You issued one check from the account 8765. That should reduce the balance as per 8765. We should reduce the balance as per 8765. It is wrongly been deducted from the balance as per 5678. So balance as per 5678 has wrongly gone down. It should not. We're making changes in passbook. So what do we do with our passbook balance? Reduce. Shall we? What is the amount? Hey, no. Wrong debit in passbook. So passbook balance has gone down. Cash book balance is not. Wrong debit. Balance per passbook has gone down. Balance per cash book has not. Where are we making changes? Passbook. So what do we do? Add. Sorry. I got little carried away looking here and there. Some people there are busy. Some people here are busy. In between me, I'm jobless. Come on, sixth one. A check of rupees 1000 entered in cash book but omitted to be banked. Ooh. A check of rupees 1000 entered in cash book but omitted to be banked. Means what? You received the check. You received the check. You entered it in the cash book. So it's Friday. You received the check. Lakshmi Manek bandide. Oh, you cannot send it to bank now. You kept it in the puja room and then you did puja. Then what do? You put one banana, agarbatti, after that you forgot the check there only. You didn't bank it. Meaning you didn't deposit. Banked means deposited. What do you mean by the word bank? Means deposited. This check has been, hey, people over there. Ignoring, not trying to concentrate. Yeah. So check has been not banked, meaning check has not been deposited into bank. So check has been received. Cash book has increased. Not been deposited into bank. Passbook has not increased. Where are we making changes? What do we do? Come on, let's add this. How much? Then last three adjustments for broad problems, sir. 10 marks unde kodtara. 10 marks. Okay. Read seventh one. Bills receivable of rupees 5200. Previously dishonored rupees 200. This was the same way given in our material also. Told that there is a spelling mistake in this one. This question has a spelling mistake. People is decided for like, hey, grace mark. This is an expected error. You can easily correct it yourself. You won't get grace marks for this. So the first thing what they meant is discounted. A bill of rupees 5200. Previously discounted. Previously, Very good. Discount being 200 rupees. Discounting means what? See, you have a customer to whom you sold goods. That guy has given it in rating that you will pay later. That is a bill of exchange. You give me the bill of exchange. You instantly want cash. You instantly want cash. You will go to banker and then say, banker, can you give me money? Banker will ask, what will you give me? I'll say, I can give this bill. Then in banker, you will say, okay, banker will say, but this bill you will receive money. I receive money only after 3 months. Say, I want money right now only. Can you give? Banker will say, okay, but I will charge some money. Say yes. So on the bill, the value written is 5,200. Banker will take that bill, give you 5,000 rupees today, and banker will wait for the 2 months, 3 months, or whatever. After the 2 months or 3 months is over, banker will collect 5,200 from the person who was saying that bill. Sir, banker is making profit. Yes, no, banker waited. You also should have waited for 2 more months. Then you also would have got 5,200. You want the money immediately? You don't want to wait for 2 months? So you ended up paying 200 rupees as charges to bank. You ended up receiving 5,000 in the place of 5,200. So meaning you ended up paying 200 rupees as charges to bank. Do you get it? That is like interest or any expense charged by the bank because banker has paid you now and will collect the money later. So this is the business. You are a trader. You have sold goods to somebody. Your customer has given you a bill. You took that bill to bank and immediately you took money. Bill value 5,200. Banker paid you 5,000. Bill value 5,200. Banker paid you 5,000. At the end of the period, when the bill matures, banker will collect 5,200 from such. If in case the person who had signed that document fails to pay money 5,200, the banker will come back to you and collect 5,200. Banker will collect how much from you? Banker will not be happy with just 5,000. Banker wants 5,200 full money. Whether it is from you or from the other person. Get that? So that is called dishonoring of the bill. Now see what has happened in this case. A bill for rupees 5,200 previously discounted. It is previously very good. Discount being 200 rupees with the bank had been dishonored. Means the moment it is dishonored, banker will deduct the money from your bank account. Am I right? Passbook. How much will the banker deduct? 5,200. Banker has deducted 5,200 from your bank balance, but you have not entered in cash. Why? Banker gave you advice only on first day. Advice means what? Give it in note, no saying that this you have done. Take you also enter. That information paper, whatever the bank gives is advice. Banker has given us advice on 1st of April. So we will also write the entry on 1st of April. Till then, we don't know. We are very innocent. So balance as per passbook has gone down, cash book is not. Where are we making changes? What do we do? How much do we add? 5,000. What do we have after that? Come on, let's quickly see the 7th one. A bill for rupees 10,000 was retired. Retired means what? Now every bill will have a maturity date. As well, this is a date on which the bill will mature. In case you settle the bill value before the maturity date, that's what we call as retirement. Like one day everyone will die. Right or not? The day you die, you stop working. But before you die, only you stop. Not working. That is retirement. You die, you don't work. But if you stop working before you die, it's called as so offensive, no? All the people who are retired and then sitting at home watching this session, please don't get offended. There is a remote possibility they're searching something on YouTube because they're not working and suddenly if they see this, they get offended. Yeah. Now please don't make a short out of this video when it is on YouTube and then like okay all the retired people don't fight with me or like throw an allegation, throw alligators at me. Yes. Okay, a bill is retired. So you had basically given a bill against which you were supposed to pay 10,000 rupees. You were supposed to pay the money later, but you retired this bill. You paid it before. So listen, when you had to pay the money against the bill, assume after 1 month, say 25th of December, you're paying it right now, 15th of November or 20th of November, only you pay. Paying 1 month before the maturity date, because you pay before the maturity date, they give you some discount. Give some, if the bill is 10,000, you don't have to pay 10,000. Same is the case here. Here also there is discount. How much discount is it here? 175. 170. So there is a bill of 10,000 which you are retiring, paying before the maturity date, got 175 discount. NSA you need to pay 9,825. Yes sir. So passbook mein how much should be the decrease? 9,825. Cash book mein how much should be decrease? 9,825. But creatively, you've done a beautiful error. What is it? Have a look. But the full amount of the bill was credited in the bank column of cash book. Wow. So what did you do? It is recorded. It is recorded, but recorded in full amount. Recorded in. You should have reduced your balance as per cash book by how much? 9,825. And passbook also by 9,825. Because the payment is 9,825. Passbook has reduced by 9,825. But in the cash book, you wrongly wrote 10,000. Your cash book has gone down by 10,000. You should have reduced how much from your cash book? 9,825. But you wrongly reduced how much? 10,000. So cash book has further gone down by how much? 175. Yes, do you see what's wrong here? Can you see the P? In order to see the P, either you have to CF or P. What's your starting point? What do we do? Minus. How much do we deduct here? The rate minus 175. Very good. Come on, what's after that? Ninth one. A check for rupees 2,400 deposited into bank but omitted to be recorded in cash book. This is ulta of our one of the first error. First I told no, you received the check, you kept it in the puja room, you did puja, you recorded in cash book, but you forgot to send it to bank. This is different. What do? You took the check, you sent it to bank, forgot to record in cash book. Last time the check is there, no, after 1 month when you are cleaning the puja room and putting all the old flowers, so then you realize, oh my god, check is here only. So this time what did you do? The moment you get the check, immediately you send it to bank. You didn't inform the cashier also. Cashier did write the entry only. Did it again. Check of rupees 2,400 deposited into bank but omitted to be recorded in cash book was collected by the bank on 31st of March. So bank has already collected the money also. Balances per passbook has. Balances per cash book has. Passbook balance has increased. Cash book balance has not increased. Can you see the P? In order to see the P, either you have to P down or C up. What's in your control? What do we do? P down. Shall I write as minus 2,400? Yay! Done. That's it. Minus 33. No, sir. How do we deal with order? Simple. Passbook is minus 33,575. No. When you input in the calculator, enter it as minus. Do all this plus as plus. Do all this minus as minus. If you get the end answer as minus, it is overdraft. If you get it as plus, positive balance. This is as per cash book. Noda na. Ayyo, sorry. Illa. I got confused of touching that screen. That doesn't work. This is not touch screen. This is touch screen. Yeah, because this is my screen. Minus 33,570. I can only touch my screen. Minus 2,800 plus 7,500 minus 2,500 minus 500 plus 300 plus 1,000 further. Minus 27 9 50 minus it, yeah. That means cash book is. So listen, please listen. When you write this answer, you can write this way. You can write balance as per cash book. Balance as per and write within brackets or write minus 27,000 whatever. Or if you use the words overdraft balance as per cash book, then you would have to write positive because you already use overdraft. No. When you already use overdraft, you don't have to write minus. When you write just bank balance, write it as minus. Or instead of writing overdraft balance as per cash book, you can also choose to write credit balance as per cash book. You can also choose to write. If you again use the word credit balance, you don't have to write minus here, or you don't have to write overdraft here. You get this? You can either use the word debit credit or overdraft or nothing. But what is it that I would recommend? I would say write both. Write one thing like balance as per cash book minus 27,000 whatever, and write brother overdraft balance as per cash book 27,000. If you see our class notes, we write the same thing. Three types. Three languages we write the same. Correct or no? Yeah. This is exam paper May 18th. Got it? Then we have another exam question. This is from May 19th. Look at this. This again looks very similar. RK brothers, same question is there. In our HS material. It's also part of IC material. There in IC material, then it came to HS material. Same thing. Yeah. I should give credit. Source is very important. So again, this is starting with bank balance as per passbook, debit balance. Debit balance as per passbook is minus balance, negative balance. So again, very similar to the one that we've done now. And adjustments are also same. check 400 directly deposit to bank, direct deposit. Out of checks 34,000, 20,000 were presented for payment till not presented for payment till 30th June. Very, very similar adjustments. So I would prefer to go to the next one. Shall I? I think that's it. We would have to do one more question, which we'll do in tomorrow's class. That will be based on amended cash book and this one. So amended cash book and this one, no? Simple. I'll tell you how it should be done. But however, we'll see the question tomorrow. So when they've given all the adjustments to you in the question, no? Right next to the adjustment, make a note as to whether it is timing difference or non-timing difference. Right next to the adjustment, we'll make a note as to whether it is timing difference or very good. So remind me towards the end today. Towards the end today, I'll give you some examination. Have a good 15 minutes. Not general discussion as to what is to be done. Specific may examination pointer will do. So I am compiled a small presentation to do the same. What pointers I would want to tell, we'll do that. And tomorrow towards the end, what to do, I'll tell you. ಸ್ವಲ್ಪ suspense. I'll tell you tomorrow. Paper discussion will. Other than that, for straight exam input, I'll tell you what should be done. Yeah. Differences will segregate into timing and non-timing. All the timing differences will appear in PRs. All the timing differences will appear in non-timing differences will appear in amended cash. Non-timing differences will appear in the amended cash book is not very difficult, guys. Receipt payment business. Same receipt payment business. Or if you like the BRS logic, no. Simple. BRS में plus means amended cash book में debit. Or receipt. BRS में minus means amended cash book में minus or payment. This is if you're starting with balances for cash. And for questions with amended cash book, you would have to start with balance as per. You would have to start with balance as per. Get that? Yes. Nice. So by this we're done with BRS topic as such. And let's quickly see what exactly is the TOFA. So this is the TOFA on BRS. You can take a picture. You take a picture and then you can solve. However, I'll share all the links also with you people again on the Telegram. Are you guys seriously clicking, scanning it, or clicking picture of your selfie like this? Come, yeah, come. I hope you are. If in case you click any pictures, please do tag it. Whatever pictures you post, please take the nice. You got your text. Yeah. So what is it telling? Tag. So I will share these again with you all on the Telegram channel if you want to take up. If you not click the screenshot. So and very important. I will close all the links by end of the day. I will not keep it active for tomorrow because a very simple reason. It is not like I don't want to share it with you. What I understood, no, whenever you give any work to anyone without any deadline, no, it doesn't work. And same happens in office also. Like assume that there is some work allocated 30th September. Till 25th of September, we don't have the seriousness to do. This is when we start. So same logic works with you also. So for the chapters that we finish today, I will keep the links active today. 12 o'clock in the night, links cease. Links. I'll stop accepting responses. Means if you open the link, sheet will not open. It will come, but it will say not accepting. You get that? So if I am a good boy, I might allow you also later, but I am not a good boy. Bad boy. So I will not. So take all the chapters so far today only, before 12. Okay. If you finish today's work today, it will be easier and nice. Got it? Shall we get started with a new topic now? Yeah? Or do you want to take? How many questions are there? Okay, fine. Take TOFA. Take TOFA on BRS.